Oh, yo, what is up for y'all on the YouTube replay? I hope you were having a great Saturday. I just did a bunch of yard work, so I'm pretty tired, but the stream might be a little short. But let me give you a quick portfolio update. Let me show you how the market's doing, or at least how my portfolio's doing. It is the weekend, so come back to tomorrow's stream, though, on Sunday when we'll stream when the market's open. We stream every single day, by the way. But check this out. Here is our buy and hold portfolio. So once I buy a stock in here, I legit just try and never sell it. Just hold it for the long run. Our Comfort System stock is now up over 100%. I can't believe it. Like, we literally bought the stock earlier this year. We also bought Amphenol Group earlier this year, and we're almost up 100%. We actually would be up almost 100% if I didn't dollar cost average up. See, I don't mind buying stocks even though I'm up on my positions. Like, I did that with Amazon as well. Like, even though I was up so much on Amazon, I decided to, continue buying more shares, because it's still a stock you just want to buy and hold for the long run. So yeah, that's our buy and hold portfolio. We of course have some losers like Perion Network. That's why you got to be careful choosing the stocks you DCA into. Like, look, I dollar cost average. I slowly bought into this stock, but it's still a loser nonetheless. So be really careful. Hey, what's up, Mutsis? How's it going, man? So here is our Webull account. This is everyone's favorite. It's kind of like my risk on account. I got a lot of popular stocks you've probably heard of before, like Reddit, Robinhood, SoFi, Disney, AMD, Supermicro, T-Mobile, Progressive, Sprouts Farmers Market. Sprouts Farmers Market's looking like a steal of a deal right now, TAP. And then we have finally our Robinhood portfolio. This is our main taxable account right here. And this is my dividend only portfolio. So actually every stock you see in here, every stock in here does pay a dividend, which is pretty cool. And here's my total percent change on every stock. So luckily we are up on every stock in here. And our largest holding is actually CEG, Constellation Energy. That's that nuclear reactor company. It's the largest publicly traded nuclear pure play stock. We also, and here's our year-to-date performance. We are up 15% year-to-date. In the past year, we are up 19%. Let me just compare that to this QQQ. Actually, let's do the Qs. The Qs are up 14% year-to-date. So we are doing just less than 1% better than the QQQ. And then we have our Roth IRA. I'm about to get paid next week, and I'm going to have an extra 1,000, and I'm going to put all that 1,000 straight into my Roth IRA. I can't wait. We're up 13% all time in here. We literally just created this portfolio just about a year ago exactly, and these are all the stocks that we own in here. It's kind of like our risk. It's another kind of like risky account. We do have Innodata has been crushing it, dude, especially just in this past week, or, they're up 42% just in a week, which is pretty ridiculous. So we're up 85% on them now. So yeah, let me go over this one stock really quickly. Then we'll get to some of the stocks you guys have in the comments. And this is the stock I'm about to buy a bunch of. I actually just made a YouTube video about this stock right here. So I'm kind of fresh on knowledge about this stock. So this company, here's what you get. You get a 3.3% dividend yield. That's very safe. The payout ratio is only a 62% when you look at the AFFO, and that's what you're supposed to look at. So you don't look at the EPS, net income payout ratio. So they have a 3.3% dividend yield. This is a data center REIT. They're a real estate investment trust. That's why you don't look at net income for this company. And they're extremely growthy. Like, if we go to their global data center business, outside the US, it's growing tremendously. Up for a REIT, this is very impressive. The sales are up 25 after growing 30, after growing 20. So the data center business is booming. Also, the corporate and other business, whatever this is up 51% year over year after growing 63. So both of those businesses are booming. They have a 62% payout ratio. If you want to learn more about this stock, go check out my most recent YouTube video. I made it literally just an hour or two ago. Also, 95% of the S&P 500 companies are customers of this stock right here. So here's how much their cash flow was this quarter: 375 mil, and the dividend only cost 231 million. So yeah, the dividend is very safe. So if you're looking for like a higher yielding name, check out that stock right there. A 70K portfolio good as 17. Yo, that's great, dude. That's like more than good. What's your YouTube channel? Hey, thanks, Steve. Yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm also streaming on there as well. So yeah, I'm streaming on YouTube and TikTok right now. What up, Bryson? Bryson said, I have 80K invested in Lockheed Martin. Yo, that's insane. You know what? This is that aerospace and defense company. And yo, what's up, Chris? Yeah, we'll look at Salesforce after this. Yes, sir. So check this out right here. Lockheed Martin's another kind of higher yielding play. An almost 3% dividend. They have a 3% yield. And look at the payout ratio. It's very safe. So 57% payout ratio. This is a stock you do want to look at the net income for when you do a net income or a dividend payout ratio. And yeah, check out how diversified the revenue streams are. They're in aeronautics, rotary and mission systems, missiles, fire control. That's up 10% year over year. Space, how's space doing? That's up 3% year over year. How's their main business, aeronautics? That's up 2.34%. So it looks like that did disappoint investors a little bit. That's probably why the stock gapped down on earnings initially. But if you notice, it's nearly recovered its entire little gap down there. Like it gapped down on earnings and it's nearly recovered the entire dip. The reason they dipped initially is because they missed on revenue by a good chunk. Investors were expecting 18.5. They only made 18.1. Oh yeah, huge miss on net income. And a huge miss on EBITDA as well. So it's kind of like a triple miss quarter. But yeah, that's a nice aerospace and defense company. Yo, what's up, the Ace? Yeah, happy Saturday, man. Yeah, hope everyone's having a great Saturday. So let's look at Salesforce right here. This is one of the software plays that have been getting kind of hurt recently. You look at Adobe, a lot of this service, a lot of the service companies have been getting hurt a bit, but let's look at Salesforce right here. They did just finish their acquisition of Infa, ticker symbol INFA, and check out the revenue. The revenue is up 9.7%, and the net income is up by 32%. So they did expand their margins a bit, which is good news. Net margin of 18.4. I think that's like the highest margin that they've ever had. And look at how diversified that they are. They're in services, sales, platform and other, integration, analytics, marketing, commerce. So yeah, they're in all those nice different industries and they're making a good amount of money, 1.8, 1.9 billion of net income a quarter. The free cash flow numbers did miss a little bit, but really the reason these software days have been getting hit is because of the AI thesis hurting them. Like in 10 years, we may not need Salesforce as much or something like that. I don't know. But look at the yield. They also have a nice yield now, a 0.7% dividend yield. Payout ratio is 25%. They're also doing share buybacks. So I actually do like Salesforce, but right now they're seen as an AI loser, kind of like Adobe. Google was initially seen as an AI loser. Then Google had that huge recovery. What website are you using? Yeah, hey, it's where you buy stocks on. If you want to, it's an app. If you want to get this app I'm on, it's in the link tree in my bio. The very first link there, my favorite one. So what's up, the Ace? He said CTS stock. Let's do it. Let's check it out. So they're a $1.23 billion company. So they're not huge, 1.23 bill, but you get a nice yield, a 0.4% yield, very low payout ratio. They trade at a low valuation, 19 times net income. They design, manufacture, and sell a broad line of sensors. Okay, it seems pretty interesting. So yeah, this might be why investors aren't too happy. Maybe they're not growing too much. Like the revenue is up 4% year over year. Like 4% when you include inflation. It's up like 1% in it. But if you go to the net income, this is the good news. The net income is up by 25% year over year. So they did grow their margins a bit, and they're net income positive every quarter. So they're making nearly 20 mil or 15 to 20 mil in net income a quarter. Decent balance sheet, though it did leverage up just a little tiny bit. This quarter, they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple beat quarter. Maybe they gave bad guidance or something. I'm not sure, but yeah, that's kind of like cool. I guess sensors play. All right, so what is this one? WLK stock. What's that one? WLK. So this is Westlake. I've actually never heard of this company before. The stock is the same price that it was back in 2018. So let's go analyze it. Looks like the stock has not done too well recently. That's not too good. But what do they do? Performance in essential materials. So this business is down 12% year over year after falling 4, after falling 27. So it looks like the business just isn't growing. They also have the housing and infrastructure products. That's down 3%. So both main businesses are down year over year. Let me see that. So yeah, the lifeblood of the company, the revenue is down by 8%. And the net income actually went negative. So this doesn't look too great. Looking at their financials, I can understand why this stock has not been doing too well. Yeah, financials aren't that great. Business isn't growing or it's declining. They lost net income for the past 2 quarters. Like, I'd be careful with WLK stock. But maybe it's I don't know. So what up, Fork? He said Arista Networks. Yo, this is a stock that is an absolute monster. They deserve to be at all-time highs as well. They were down 9% on Friday. I wonder why, if there was any specific news. Don't think so. Or actually, you can see like the AI news. Arista Networks sets AI. Okay, whatever. Okay, here's the thing with Arista Networks. Here's why they deserve to be at, all-time highs. They sell products. If we look at their product revenue, it's up 31%, after going 13. These growth rates in the middle are absolutely insane. High growth companies deserve high valuations. So their products revenue is booming. Also, the services revenue is also just at a record, also growing immensely. And it's not just the revenue that's growing, but it's also the after-tax net income, the profits. I mean, they made $888.8 million of after-tax net income this quarter. They're beating all the analyst expectations. The orange line's the analyst expectation, and they beat it. So yeah. Mikey said, what app? It says, yo, Mikey, yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio. It's that very first link there. It's actually a brokerage where you buy stocks on. My favorite one. So what's up, Alec? What's up? He said, can we look at Hive? So this is actually a Bitcoin mining company. And unfortunately, these Bitcoin mining stocks just don't keep up with the actual price of Bitcoin. Yeah, check that out. They actually had a great Friday. They were up 14%. I wonder if there was any specific news. It's probably just momentum. I don't know, but let's go check it out. Let's go look at the financials. Unfortunately, what you really just look at for these are the assets. The assets that they own are just all the Bitcoin. So they just mine Bitcoin and then it goes to their assets, and that's how their assets go up every quarter. So you really just trade these off their net asset value. So they have like 630 mil of Bitcoin. The market cap should be kind of similar. Yeah, 870 mil of so they're trading at like 1.2x Bitcoin value. So anyway, that's Hive Digital. Unfortunately, like if you look at CleanSpark, so what are the other Bitcoin mining companies? I don't even remember them because I don't pay attention to them, but they just don't keep up with the actual price of Bitcoin. So in my opinion, I would just buy Bitcoin. So, all right. Oh yeah, I wanted to get to Adobe. So Adobe stock just reported earnings. I actually haven't looked at them yet. So let me go see what they actually reported. So they beat on revenue. They beat on net income, and they beat on EBITDA. So it was a triple beat quarter, but the stock didn't move. Yeah, the stock was basically flat on earnings. So that's strange. Yeah, wait, Q3. Okay, so actually, this is 2025 Q3. The numbers are out here, but they're not down here. So unfortunately, we don't have the numbers down here yet. But it was a great quarter. Apparently, maybe they just gave bad guidance. But here's one thing I love about Adobe that they do. They legit spend all of their excess money. If we go to their cash flow statement, they spend all their excess money on share buybacks. They spent $3.5 billion just this quarter buying back their own shares, $3 billion last quarter, $2.5 billion. They're spending billions every quarter solely buying back their own shares. Here's what that does for you as a shareholder. If we go to the net income increased by 7.5% year over year. But the net income per share increased by 13% or 12.89. That's because the share part of the ratio went down so much. You own a huge chunk more of the company than you did a year ago. So Adobe, I think, is at the end of the day, not going to be hurt as bad from AI as people think, in my opinion. So yeah. Hey, what up, Felix? What's up, man? Good to see you. Hey, what up? What's up, 77? How's it going? So MER 509 said AMPX. So this is Empress Technologies. So they've had a nice little rally the past couple weeks here. Check that out. Let's see how big they are. So they're only worth $1 billion. So this is $1 billion company now. Let's see how their financials are. So yeah, the revenue is blowing up, It went from 3 mil to 15 mil. That's a 4x increase from the previous year. And they're narrowing their losses as well. They used to lose over 10 mil a quarter. Now it's only 6 million, 59 or 49%, better loss than the previous year. Good balance sheet, deleveraging. So actually, I'm going to put them on my watch list. The numbers are small, but the market cap's small. What's the app? Yeah, hey, official. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's actually a brokerage. So yeah, link tree in bio, first link there. Celery, what up, my friend? Hope you're having a great Saturday. Let's see, INLF stock. Let's check it out. So, okay, yeah, we're not going to cover this company. They're only worth $14 million. So the whole entire company is only worth 14 mil. And they don't have or for the entire year of 2024, the revenue was 15.8 million, and they made net income. They are net income positive, which is good. So at least they're not like some money loser, but it's just a very small market cap. I'd be so careful with that. 94 cents. They're probably not even NYSE compliant. Oh hey, GLW, is that Corning? Yeah, so Corning, this is a huge like surface device company or something. Let me just go look at them again. They've been on fire recently. The stock is easily at a new all-time high. So congrats if you own this stock. I listened to you and Kevin the other day. Yo, KB, thanks so much, KV. I'm gonna give you a follow. I really appreciate that. Thanks for listening to the little podcast there. So here's their optical communications revenue. Check out the growth here. Optical communications is up 41% year over year. So that business is at a record. Then they have the display revenue. That's down by 12. Specialty is up by 8. Automotive down. So overall, though, here's why they went up so much. So it was a huge beat on revenue. This is the orange line the analysts were expecting. There was a huge beat on revenue, a huge beat on net income, and a big beat on EBITDA. So it really was a good quarter. They triple beat. The profits have exploded. You really look at the operating profit because they've had these one-time adjustments, but revenue's up 19, profits are up 208. So that just means they're expanding their margins. So Corning, I could see why they're at all-time highs. They've been doing very well. Jenny, how's it going? Said SYK stock. What's this one? Stryker Corp. Then we can look at Train and Coinbase. Oh, Coinbase stock. That one should be interesting. So Stryker Corp, they're a big company, $150 billion market cap. So that's pretty good. Let me check out how they're doing. MedSurg and Neurotechnology. The growth has been very nice. It's up 17% after going 12, after going 12, after going 10. So they're just continuing to see growth, as well as their orthopedics business. As we can see, the annual trend looks very nice. So let me just go to the revenue down here. Revenue was $6 billion. Out of that $6 billion, $900 million of it was after-tax net income. So they're making a couple $100 million a quarter. That looks great. So, they seem like a nice medical device company. All right, TT, this is Train Technologies. This is kind of like a HVAC kind of company, huge modular machines. My college has a huge Train Technologies HVAC outside. So let me see what the dividend is. A 0.9% dividend yield, pretty good. They are exposed to the housing market and the residential. It's very interest rate sensitive, but check this out. The equipment revenue, these growth rates are great. No declines here. It's up 6% year over year. Also, their services revenue, they service the huge machines, it's also booming. So they're on my watch list. I really like this company. I actually chose Comfort Systems over this stock, but I still really like this company. Sales are up 9, net income's up 15. So that means they're expanding their net margins. They're also just printing money. I mean, easily, if you average it out here, like 700, 800 million of after-tax net income a quarter, deleveraging. So Train Technologies is a monster. I love them. Okay, let's see. Okay, Coinbase stock. You know what? Who owns Coinbase is actually Cathie Wood. So this stock is in the Cathie Wood portfolio. 5.6% of her portfolio is in Coinbase stock. This is like a crypto proxy. They're like a crypto trading platform or something. And here's a cool metric we get. This is really the metric we want to look at here. This is their monthly transacting users. So not just monthly active users, but their monthly transacting users is 8.7 million. When this exact same time last year, it was 8.2 million. So their active users are growing. But check this out. They actually missed on their revenue expectations by a big chunk. Like if we just go to the revenue right here, the revenue only grew 3.28%. I think investors, for this industry and this stock, I think investors wanted a little bit more growth than just 3% revenue growth. Operating profit went negative this quarter. So that's why I think the stock fell. But still, I like them. They're kind of like a Bitcoin proxy. I started covering Navitas. Yeah, I don't love that company, but that seems like the right move. That one's a very risky one. BITO gives between 80 cents and $1. Oh, you're talking about the covered call ETF. So yeah, if you look at the actual price of Bitcoin, it doesn't look like this. Like this stock when they IPO'd, or it's an ETF, it was $40. Now it's $20. So Bitcoin is not 50% off its highs, and this basically just sells calls on Bitcoin. So it's kind of like a MicroStrategy or a MSTY. They just sell calls on Bitcoin and then pay you the premium. So that's how they have this 52% dividend yield. It pays monthly, but you won't really outperform the actual price of Bitcoin. You basically just buy that to get a little monthly dividend. Yeah, nice, Meek. So what up, Nads said HRM stock. Is that? I can't find that ticker symbol there. I unfortunately, I do apologize there. What is your best stock? My best performance stock, or my largest one, is ticker symbol FIX. It's another HVAC company. They do heating, ventilation, air conditioning, and some electrical work and plumbing for like over 12,000 buildings. They just service them. It's a really boring business, but it's always like the boring companies that do good. Like a Coca-Cola bottling company. It's really boring, but just like absolute monster performance. Self-storage stocks, a lot of stuff. Anyway, what up? Mari said Nebius stock. Yo, Nebius is a stock owned by NVIDIA. So if you go to the NVIDIA portfolio right here, one of the stocks they own is Nebius. And this stock just got an insane deal from Microsoft. So I should show it down here. Yeah, Nebius signs, it's number one here. Nebius signed $17.5 billion GPU infrastructure agreement with Microsoft. So that's a great customer, great company to be partnering with is Nebius. And again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own little financial analysis on them. And when we go analyze them, everything looks good here. They're extremely growthy, and they're even going to be more growthy after today, after that new deal. But the revenue went from 14 mil to 105 mil year over year, a 7x increase. And the analysts are expecting the revenue to continue. 105 mil this quarter was a record. It's supposed to be 150 and then 260. It's supposed to be now, even the analysts are going to have to move it up after that huge Microsoft deal. So Nebius, it might be a little expensive here, but congrats if you own them before today. Hey, Sean, what's up? Good to see you. All right, BITO isn't spot ETF. It doesn't hold Bitcoin. Yeah, you're right. You're right. They just sell calls on Bitcoin. TT and CAT are tied to the growth of thousands of data centers. Yeah, hey, Caterpillar is huge. They have like diesel machines under the data centers that whenever the grid goes down, they have these usually like 3 Caterpillar diesel generators under every data center. So yeah, that's kind of why CAT has been booming. I feel like CAT might even have some more upside potential. They make a lot of money servicing these too, but they have a 1.3% dividend yield, only a 25% payout ratio. They have a lot. You buy the stock now, you're getting and hey, Mozo, thanks for the roses there, Mozo. I do really appreciate that. But yeah, 1.3% dividend yield, and look at the net income multiple. They're trading at 21 times net income. I feel like this could go up to like a 23, maybe a 25 before it maxes out. Send this to $500 a share. So anyway, that's CAT. Here's the revenue by breakdown. They're in energy and transportation, construction industry, the resource industry. Big mines need the big equipment. So anyway, yeah, Caterpillar's pretty cool. Nice dividend growth stock, nice yield. Let me put CAT back on the watch list. Oh, it's on the watch list. Okay. All right, so let's see here. Yo, Nathan, what up, Remco? He said GWW. Let's check it out. WW Granger. So this one has done incredibly since 2019. It's 350. Now it's $1,000 a share. Let's go see how they're doing. So you get a near 1% dividend yield. They're trading at 25 times net income. So that's a pretty fair multiple. So they're in high touch solutions. Okay, and endless assortment. What is that? Endless assortment. Let's go see how that business is doing if it'll load here. Maybe it doesn't want to load. Oh, that one's growing nicely. It's at a new record this quarter, up 20%, nearly $1 billion of revenue that quarter. So revenue isn't growing too fast. Like I would like to see it faster. That's probably why they're trading at 25 times net income, and that's probably why the stock has been flat for a year. But the revenue's not growing too much. The revenue's only up 5% year over year. All these are single digit growth rates. Last quarter was only up 1.6. So 5% revenue growth, and the net income actually didn't keep up with 5. So their margins actually fell a little bit, but still they're making very consistent net income, nearly exactly 500 million of net income every quarter. So my only critique is I want to see the growth come back, but they've done pretty good. Pretty interesting. All right, Barella, how's it going? Jonathan said, can you do one for me? Yeah, Jonathan, if you got a stock you want me to look at, let me know. CLSK stock. So Clean Spark. This is another Bitcoin mining company. And again, the evidence shows that, like here's you can see 100% of the revenue just comes from Bitcoin mining. It just doesn't keep up with the actual price of Bitcoin. And you really just look at the balance sheets and the net asset value. Like valuing these stocks, they're trading actually slightly under their Bitcoin value, but they do have debt, so maybe that cancels it. But yeah, that's why this stock, is over 65% off its all-time high. Bitcoin's nowhere near 65% off its all-time high. This one, they just don't keep up with Bitcoin, and so I'd rather just own actual Bitcoin, in my opinion. I don't think they'll ever outperform. Maybe temporarily, but not in the long run. All right, so Polestar, Lucid, UPS. I don't like any of those names, to be honest with you. Like Lucid's not good, Plug Power's not good, Hive, Neo, UPS isn't good. He gave a bunch of stocks that are just like mid. You know what? Let me check out UPS because this one is a bit popular. So UPS, a lot of people have been talking about this one. Like, hey, they look undervalued. They look oversold. You get a crazy dividend. Maybe we should buy them. Here's what I'd be careful with, though. Check out the yield here. Here's why investors are attracted to them. They have a 7.75% dividend yield. So that's a very nice yield. But here's the thing. They actually haven't been able to afford the dividend the past couple quarters, and their average daily parcel volume is down by like 6% year over year. But here's the thing. Also, the revenue isn't growing. It's actually down year over year. Revenue's down 3, net income's down 9, so they're losing their margins. But some people say, hey, they're still making net income. They're making over $1 billion of net income, a quarter of net income. Well, yes, they're making net income every quarter. They're not retaining any of this. And here's what I mean. They made $1.28 billion of net income this quarter, $1.28 billion, but the dividend cost, oh my goodness, where'd it go? There it is, right there. The dividend cost $1.35 billion of net income a quarter. So they didn't retain any of that net income. They paid over 100% of it out in dividends. They actually couldn't afford the dividend this quarter. They couldn't afford the cost of the dividend last quarter either. So I think the stock needs a healthy dividend cut, or at least the net income needs to rebound quickly to make the dividend safe, because that one looks very risky. I'm all in on FIX. So DG, I'd be careful at this price. FIX is my largest holding by far. I mean, I don't have a company even close to second place. But yeah, Comfort Systems has been my best performance stock of all time. I'm kind of all in on them too. Love them. So, all right, what's this one? Amazing Places said, look at BMEA, Biomea Fusion. So, 97% of its free cash flow goes to dividends. Yeah, and over 100% of its net income goes to dividends on UPS. All right, so here's Biomea Fusion. This is a $114 million market cap, so extremely small. They're a revenue-less company. They're a startup. So if we go to the revenue right here, it says no data because they've never sold anything. They've never sold a product or a service. And if we go to the net income, dang, they've lost $50 million already this year. They lost $50 million of net income in the past 6 months, and the whole company is worth $111 million. So that's why the stock's at all-time lows. There's real bankruptcy risk there, and they don't sell a product. So I'd be so careful with that one, just because you're kind of just betting on if they even have it. It could be a zero. All right, so super careful there. Warner Bros. Discovery is being bought out. Yeah, Warner Bros. Discovery is moving like with PSKY. I saw that. So Gregory said Innodata. Yo, this stock has been one of my best performers And as much as I love this stock, and as much as I love a lot of these growthy names in my Roth IRA, I can't make them meaningful size positions like CRMD, DCTH, and Innodata right here. I can't make them meaningful size positions, but I still want exposure. And this one is one I absolutely love. And they have been on a tear. Like, there's no news either. Like, there was no news, no earnings. The stock just like momentumed up. It was ridiculous ever since the Oracle earnings. So anyway, let me give you a quick breakdown on why I love this stock. I wouldn't buy them at this price, but they're a $1.99 billion company. So the whole company's worth basically $2 billion. They're trading at 48 times net income. Man, this stock was just trading. Yeah, we can see it right here. Or wait, PE. If we go back over here, if it'll load, oh, maybe I won't check it because it doesn't matter. But anyway, yeah, here's why they deserve a high valuation, a high PE, is because they're high growth. Their main business, their digital data solutions, which is 86% of all their sales, is up 100% year over year. It's up 99% after growing 92, after growing 24. So the business is super growthy, and this is all organic. Like, they didn't acquire a business. Also, their agility revenue's up 12. And another really cool thing about this stock is the fact that 5 of the Magnificent Seven are customers. Google's a customer, NVIDIA, Microsoft, Amazon, they're all customers of this stock right here. So they're really growthy, revenue's up 80%, and they're not just making revenue, but they're net income positive. They're profitable every single quarter. They also are deleveraging. Their asset to liability ratio is 57. Now it's only 34. They're free cash flow positive every quarter. So Innodata and their analysts are expecting them to continue to grow. Like, if you look at the revenue, it's 58 mil this quarter. It's expected to be 71 million in 2 quarters. So anyway, Innodata is just a growth beast. It probably looks too expensive right here, so I'd be pretty careful. So, what stocks would you recommend for building a portfolio? I already have VOO. I want more risk. Yeah, hey, that's a good question. I would just buy companies you know, use, and love. Like, that's what I've done, and also do a little analysis on them financially. Like, what do you use daily? Like, I'm always on Instagram and Threads, so I buy Meta. I'm on YouTube. I buy Google stock. McDonald's. I own McDonald's. I would just look at the S&P 500 and look in and find some of your favorite companies in there, like McDonald's, Google, Meta, United Rentals, Constellation Energy. I have Amazon stock. I have Coca-Cola, Amphenol Group. Invest in what you use. Things that have good. Hey, what up, Cross? He says, have you checked out the Gemini IPO? Yeah, so I haven't really. So this is that like crypto exchange. They're kind of like a mini Coinbase. Is that right? They're kind of like a mini Coinbase or something like that, because the market cap, yeah, they're only a $3.8 billion company. They literally just IPO'd. And unfortunately, since they just IPO'd, we don't have much data for their financials, because usually most companies, when they IPO, they have more liabilities and assets. Then with the raised funds, the liabilities deplete. But the revenue we're getting right now doesn't look too great. I mean, revenue's down 7. They lost a lot of net income. They have more liabilities than assets. So, and I'd rather buy Robinhood or something. I'd rather buy Futu stock if I wanted exposure to like crypto exchanges or something like that. Robinhood just acquired some crypto exchange for like $500 million. That's like a tenth the size of Gemini or less. Okay, no, like a seventh. Okay, what up, applesauce? Think you can look at JD? Oh wait, I saw this one first. Let me look at what up, Will. What's up, Will? He said GE Aerospace. Then we'll look at JD. Then we can pull up. Oh, AME. Yeah, we'll look at AME, BTDR. I'll try to get to all these stocks here. What brokerage is this? Yeah, hey, by the way, yeah, this is my favorite brokerage right here. If you want, it's an app where you buy stocks on. That's all that means. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so it helped me out. But yeah, anyway, here's GE Aerospace. The aerospace and defense companies have been on fire, and they have this business where they repair these commercial engines, commercial plane engines, and it's a business that like no one can replicate. Like, there's so many high barriers to entry, and it's done great. Like, ever since the spinoff from the healthcare and the energy business, like, the management has really been able to focus on the business and expand the margins. Like, that's the growth story on GE Aerospace. It's been the margin expansion. So first off, the revenue is very growthy. The revenue's up 21%, but revenue's up 21%, but profits are up 59, which means they're expanding their margins. They have insane near 20% net margins every quarter. So that the margins increased from 14 to 18. That's insanely good when you're doing 11 billion in revenue a quarter. So yeah, they deserve to be at all-time highs. Plus the dividend just hiked up. I love GE. Wish I owned them. Really do wish I owned them. So here's actually a Chinese stock. So this is JD.com. It's an ADR, so you're paying an ADR fee since they're Chinese. And the retail like China stocks haven't done too well. Like this stock is the same price that it was back in 2018, but they're finally like extremely profitable. Like if we look at the valuation, they're trading at 9 times net income. Like again, they just kind of sell a commodity. Like they just like a Kroger of China, but not like physically. But yeah, here's their JD retail business. It's 86%. It's up 22%. Actually, let me see how the revenue is doing. So the revenue is up 24%, but the net income fell by 50. So was that real? That was real. That's actually odd. So it looks like the margins did fall a bit. Only a one. Yeah, you know, these retail business always just have low margins. Maybe there was some one-time adjustment this quarter, but yeah, the net income did fall year over year. So yeah, they're kind of like a China Amazon. Yeah, all their sales come from China. So they're super growthy though. Revenue's up like crazy. So what up, applesauce? So BT. DR stock. So this is Bitdeer Technologies. Haven't heard of them before actually, but they're a $3.5 billion market cap. So they're actually a pretty big size. What industry are they in? They are in software application, crypto. So crypto software application. So revenue is done actually, well, it's really cyclical. It like fell 40% the past quarter, but now it's up 56. The net income, so they're actually losing net income every quarter. That is something you got to watch out for. They're diluting you a bunch every quarter. So by share issuance, so they're diluting you by a couple $100 million a quarter. So it looks like it's some crypto exchange or I don't know, crypto software. I'd be careful with them. I didn't see anything really blow me away there. What's this app? Yeah, hey Chris, if you want to get this app I'm on, you buy stocks on here. It's a brokerage. It's in the link tree in my bio. The very first link there. It's an affiliate link too. So anyway, my favorite one. So AME stock. What is this? Ametek or Ametek. Wow, they've done insanely good. They're at an all-time high. So congrats if you own this one. A $43 billion market cap. I've never heard of this stock. So they have a 0.6% yield, very safe payout ratio. They increase their dividend every single year. Very nice. They're trading at 30 times net income. Let's see if it's justified, if they're really growthy. So electronic instruments, that's up 0.5%. Electromechanical is up 6%, but that did beat the analyst expectations. I do note, though it wasn't that growthy, it was more growthy than the analysts expected. They beat on revenue, they beat on net income, and they beat on EBITDA in the most recent quarter by a pretty big chunk. So yeah, that explains why they gapped up on earnings. They triple beat. The revenue's up 2.5, but the net income's up 6. So they did grow their margins. Yeah, they're making easily 350 million of after-tax net income every single quarter. So the profits look good here, but I would want to see the growth kind of come back. So what up, Ali said Arista Networks. Let's check it out. So did you do Open Door? I've not looked at Open Door. That one's a huge momentum company. We can look at Open Door. Let me know if you want. What's your favorite brokerage? It's the one I'm on right now. This app I'm on. You know, I have all these other ones. You know, I have a Robinhood brokerage. I have a Webull as well. But my favorite one, the lowest fee, most useful brokerage is this one right here, the one I'm on. You know, I keep my idle cash in here as well because with those other apps, you have to pay $5 a month to earn interest. But with this one, you don't have to pay anything. So lowest fee, my favorite one, best useful features. If you want to get it, again, it's in the link tree in my bio, the very first link there. Brokerage called Moomoo, my favorite one. So anyway, let's keep going here. Back to Arista Networks. This is an insane growth company. They deserve to be at all-time highs. They deserve a high valuation because if you go to the PE right here, again, the PE is just the net income multiple plus any buybacks or dilution, but they're trading at 54 times net income. Here's why they deserve that high valuation. the product revenue is booming. I mean, it's up 31% after going 12, after going 40, after going 60. Like, this is incredible product revenue growth, and not just the product revenue, but the services as well. That's again, just incredible growth rates in the middle. And so the business is growing, and so are the actual net income profits. The net income this quarter was $888.8 million, a 33% increase. I mean, the net income just hits a record every quarter. Insanely good balance sheet as well. So Arista Networks is just a high growth stock. I like them. Probably might be too high of a valuation for me to pay right now, but what are your thoughts on companies making Ethereum reserves just like Bitcoin reserves? That's like Bitmine inversion. I forget that ticker symbol, but yeah, they should just trade with Ethereum eventually. They might trade at a slight premium to Ethereum. But someone said, or who said that? Celery. He said QFIN stock. So this is an ADR, a Hong Kong stock. So you also pay a little yearly fee. They're Chinese. Okay, so yeah, we're going to convert their currency from Chinese yuan or Chinese yen to USD. And check this out. I do like this. The sales are up 27. Pretty good. Sales are up 27. Net income is up 27 as well. So good margin growth keeping up. They're making 260 mil of net income a quarter. Balance sheet's growing. So hey, not too bad, and you get a crazy 5% dividend. You get a 5% dividend. The payout ratio is only at 21%. So, well, there you go. QFIN's pretty interesting. They have incredible margins, 30 to 40% net margins. You do have to pay the ADR fee, but the financials look pretty good. All right. Hey, Plasma, what's up, man? Good to see you. How often do you go live? And is this live analysis something you usually do? Yeah, hey, I stream every single day, usually around, and actually a little bit before now, but since it's the weekend, I'm kind of streaming at a random time. And, but yeah, if you want to hit the subscribe button, follow button, we stream every single day, sometimes twice a day. And I sell nothing, by the way. I have no course, book, WhatsApp. I'll never DM you, follow you. Watch out for people impersonating me. But let me pull up Sezzle. SEZL. Look at BlackRock coffee stock. Hey, what's the ticker symbol for that? But here's Sezzle. This is a fintech right here. This is a great stock, in my opinion. It's a great pure growth company. If we go to the revenue right here, the revenue is up 76% after growing 60, and the revenue was 98 million. Out of this 98 million of revenue, 27 million of it was net income. And I know it says it's down 7% year over year. It wasn't actually. There was a one-time adjustment the same time last year. You can tell that by the operating profits. So yeah, the profits were really up 116% year over year, expanding their margins. They have incredible margins. Again, this was a one-time adjustment quarter. It wasn't actually 53, but all these other quarters are real. 25 to 35% net margins, incredible on Sezzle, beating the expectations. Revenues expected to continue to grow. So Sezzle is one of my favorite growth stocks out there. I own Dave. It's kind of like their competitor. What app is this? Yeah, hey, what up, Travel? Hey, if you want to get this app I'm on, yeah, Drew, it's in the link tree in my bio, the very first link there. It's a software it's a brokerage where you buy stocks on. So yeah, link tree in bio, first link there if you want to get it. Hey, thanks for subbing there, Keyboard. I appreciate that. Thanks, Plasma. Any companies you keeping your eye on? Yo, I'll be super quick about this. I just made a YouTube video about this. Yo, check out my most recent video if you want to learn more about this stock. But this is ticker symbol IRM, Iron Mountain. 95% of the entire S&P 500 is a customer of this stock. They have a 62% dividend payout ratio, and the dividend yield is a 3.3. So you get a 3.3% yield. It's a huge data center business. Like, we can go to their global data center business. This is booming for a REIT. It's insane. These growth rates in the middle. Same with their corporate and other. It's up 51% year over year. So this is my most recent purchase, or actually I'm about to purchase it. But check out IRM, Iron Mountain. If you like REITs, Real Estate Investment Trust, IRM 3.3% yield. I'm not doing any more details on that stock just because I just made a YouTube video about them. So if you want to learn more about that stock, check out my most recent YouTube video. I made it literally right before the stream a couple hours ago. By the way, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. How do I start? I'm from Jamaica. Oh, hey, pretty cool. Yeah, you just get a brokerage. I'm not actually sure if this brokerage I'm on right now is available in Jamaica. But I'm sure you could find a bank near where you are that has a brokerage or something, and you can just buy stocks. Pretty cool. I just buy the S&P 500. I haven't ever gotten a notification that you went live and I have YouTube notifications on for you. That's really weird, Looney. Um, well, hey, thanks so much. If you turn on the notification bell, maybe do that. Um, I don't think there's a way to turn off notifications, but there's no way I did that. Yeah, I don't. Okay, well, anyway, thanks for saying that. All right. Do you think GitLab has enough momentum to break through resistance? Let's check it out. GTLB. So GitLab. Hey, what up, Joel? We'll look at VRT as well. That's like Vertiv. There's a huge Vertiv factory right next to my house. Oh, Robinhood stock. Yeah, we'll look at ticker symbol Hood. Yeah, JAG. That's my best performance stock of all time. So anyway, here's GitLab right here. This is an $8.4 billion company. And I don't remember too much about the stock, but from what I remember, there's no real competition for this stock. They just reported earnings. And initially when they reported earnings, they gapped down. They fell all the way down. But then as investors realized the earnings were actually pretty good, it completely V-shaped recovered and, is doing pretty good. So yeah, here was their numbers. They beat on revenue, they beat on net income losses, and they beat on EBITDA. So it really was a great triple beat quarter. They are still losing money every quarter, but it's getting significantly better. And at this rate, it's going to be net income positive this time next year. So yeah, super growthy. I do like GitLab more than dislike. Deleveraging as well. They really did have a good quarter. That was a good quarter. So let me pull up Vertiv and then we'll pull up a Robinhood stock after this. I'll show you my position in Robinhood. Y'all won't believe it. I'm up 700% on Robinhood. I'll show you that after this. I regret every share I've ever sold on them. So anyway, here's Vertiv right here. The stock is pretty close to an all-time high. Yeah, congrats if you own this name right here. Let's see what they do. So they sell products and this is very growthy. Their product revenue is up 39% from the previous year. So that's very nice growth. Products up 39% and the services and spare business is also at a record, up 20% after going 7, after going 10. So that's very growthy. Revenue's up 35. Net income's up 82. So yeah, look at that. Revenue's up 35. Net income's up 82. What does that mean? It means they're expanding margins. Margin went from a 9 to a 12. So great news. Yeah, I can see why this one's done so good. You also get a small yield. What's this app? Yeah, hey, Yuv, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Again, it's where you buy stocks on brokerage. So yeah, let me pull up ticker symbol Hood right here. Now this stock, I am up 700% on, and this company deserves to be at all-time highs. They basically, the reason they gapped up on this day right here is because they're now in the S&P 500. So if you own the S&P 500, you own a little bit of Robinhood stock. You wouldn't believe it, but they're a $102 billion company, and they're extremely growthy. Like they check every box. I mean, revenue's up 45 after growing 40, after growing 50. But look at this revenue. The revenue is 989 mil. So 990 million of revenue. Out of that, 380 million of it was after-tax net income. They're printing money. They're making a couple hundred mil in net income a quarter with ridiculous margins, 30 to 40% margins. Insane. So yeah, here's my position in them. Here also, I'm a Robinhood user, so I've probably given them a lot of transaction fees and stuff. I have my Roth IRA with Robinhood as well. But here's my Robinhood position. Again, I regret every share I've ever sold in them, but we are up 730% on Hood. We bought them. I've been holding on to. I'm diamond hands over here. I was behind Robinhood back when. Yeah, right here. When they IPO'd shortly after. So yeah, I've been kind of bag holding that one for a while. Do you own any IPOs? I do not. I usually stay away from the IPOs. But what we've seen with a lot of IPOs is as soon as they IPO, they rally up instantly. Okay. So, what up? Louv said Eli Lilly, let's do it. Eli Lilly stock. And then we can, HIMS is another kind of similar business to this. What is Reliance Industries? Yo, if you give me the ticker symbol for Reliance Industries, I will check out that stock for you. I don't know what that is. But, and yo, by the way, if you want to help me out, hit the like button on the stream. I appreciate that. I sell nothing, of course. I have no course book, nothing. So here's Eli Lilly. Here's what I love about this stock. They have this ability to create these prescriptions out of nowhere. And they just instantly sell. Like Mounjaro, for example, their largest selling product is extremely growthy. Like they created this in 2022. The sales were 16 million. And check out how it just spirals up to a record. It was 3.84 billion, up 112% after going 600%, after going like thousands of percent because it's comparing from zero. But this just hits a new record every quarter. And not just, that prescription, but also Zepbound. This is a competitor to Ozempic. It's another weight loss prescription. Created this one in 2023. It was 175 mil of revenue. Now it's 2.3 bill. It just hits a record every quarter. So anyway, they just have a bunch of different prescriptions here and they print money. I mean, sales are up 37, but profits are up 61. So they're expanding margins. They're making easily, at this growth rate, they're going to be making 7 billion in net income a quarter. You get a 0.75% yield. Eli Lilly's a beast. That might be my favorite healthcare company. Eli Lilly. Probably the safest one out there. I'm not too sure, AbbVie as well, ABBV. This is a fantastic, higher yielding, even though the stock's at an all-time high today, if you, not financial advice, from my analysis, if you bought this stock even right now at all-time highs, you're still going to get probably 6 to 7% returns a year on average. And, half that comes from the very safe dividend, super safe dividend, a 3% yield on AbbVie, one of the higher yielding, safer plays that I like. Anyway, let's keep going here. How's the pipeline of new meds for Eli Lilly? I'm not too sure, actually. I know they're making their new weight loss pill. So Amazon down here in Galaxy. Yeah, let's do Amazon. I love them. I do own them in here, by the way. This is, again, my buy and hold portfolio. Once I buy a stock in here, I try not to really ever sell it. I just kind of continue to add to my positions. Yeah, here's where I was buying a little bit more Amazon. But yeah, let me see if there's any news around here. I like looking at the weekly brief. Amazon Zoox launches autonomous robotaxi in Vegas. Yo, that's finally available. I was in Vegas a couple months ago and I saw these autonomous driving Zooxes everywhere. I also saw Waymos everywhere. Actually, forget the news. Let me just dig into the financials because that's the best part here. The largest, actually most valuable part of Amazon is their AWS, Amazon Web Services business. Did you know it's the highest margin part of their business because, they're not making too much money with that same day delivery, groceries or packages, but it's easily over 100 billion of annual revenue for them. Just hits a new record every year, every quarter. It's high margin. And the margin expansion, that's kind of the story around Amazon because they're kind of facing the law of large numbers. How are you going to double 167 billion of revenue? But check this out. The revenue was up 13, but the net income is up 34. So that means they're expanding margins, double-digit margins now on Amazon, over 10% every quarter for the past year. And if we zoom out, it was a tough buy, single-digit margin, negative margin even. So Amazon has really recovered. They're also a stock you just want to never sell. How do you feel about buying the dip on UPS? Yeah, I don't love UPS. I think they couldn't even afford the dividend the past 2 quarters. I think they need a healthy dividend cut. All right, so here's a super specific ETF for GLP-1 stocks, OZEM. Oh, really? Wow, that's pretty interesting. The GLP-1 weight loss ETF. What's the expense ratio on this guy? Only 0.6. Still a little high, but here's what it owns. It breaks your money up for you into Novo Nordisk and Eli Lilly. Yeah, those are the 2 main players. I wonder if Hims is on here. They don't really sell. There was a recent partnership where they're like trying to bring back selling a weight loss prescription, but they own Roche, Pfizer they own, they own Viagra. So anyway, let's keep going here. Jeff Mack, what's up, brother? Hope you're having a great Saturday. Let's check it out. VERI, I'm pretty sure. Oh, this isn't Verisign. This is Veritone. So this company, unfortunately, has not done too well. They're the same price as they were back in 2018. But let me go analyze them. Oh, so they're a very small market cap. So they're only a $250 million market cap company. So yeah, we can see their software and products revenue. Yeah, it's kind of choppy. Let me just go down here to their total revenue. So yeah, the revenue's down year over year. So it's down 0.1 after falling 13, after falling 20. Yeah, so the revenue has just not been on. That's probably why the stock's at all-time lows. They're also losing 20 mil of net income a quarter. This was a one-time adjustment. They're losing 20 mil of net income a quarter. That balance sheet doesn't look too great. So to be honest with you, nothing's really blowing me away with VERI. From a financial point of view, those financials don't look too great. Hey, what's up, Danish? He said RIL. Let's check it out. RIL. So, Hmm. I actually look up RIL. I unfortunately can't find the one. You said Reliance Industries. Let me actually, I'll throw you a bone here. Reliance Industries. Okay, so here's the ticker symbol. It's a weird one. There's no chart either. So there's no chart available. Hopefully we have some financials that are available. Oh, so we're going to so it's an India company. That's why. So we'll convert the currency we'll convert it to USD. So oil to chemicals. They're very diversified. Oh, and they're in retail. Oh, not digital services. How's that doing? Up 15%. So yeah, look at that. 70% of all the revenue is from within India, 39% outside India. So net income. Oh, hey, look at that. Net income's up 71% year over year. And this is in USD. So yeah, they're making 2 to 3.5 billion in net income a quarter. So anyway, yeah, looks like an Indian oil and gas company. Again, I wish I could give you more thoughts on them. I can't even see the market cap or the chart. But hopefully that was the stock you were talking about. Yeah, hey, Plasma, we can't. I can look at DK&G's financials. Like, yeah, we won't look at DK&G. I have nothing really good to say about them anyway, unfortunately. Um, yeah, they just can't get profitable. DK&G just can't get profitable. They were really close one time, but they do actually. DK&G does have good sales growth. Hey, what up, agent? He said Oracle stock. Yo, you're right. Oracle went nuts. So they had a huge 339% like billings backlog or a growth in the backlog or something. It was insane. Yeah, Oracle and OpenAI signed a historic $300 billion cloud computing deal. They partner with AMD because they're going to be opening up like 37 new data centers. And they're going to be using AMD and NVIDIA chips. So yeah, 85% of the revenue comes from their cloud and licensing business. They're a huge cloud business, and they're making a good amount of net income. The net income did fall year over year, but they're usually making $3 billion in net income a quarter. They actually missed on every metric this quarter. They missed on revenue, they missed on net income, they missed on EBITDA, but it was the good guidance, the huge Microsoft deal, or not Microsoft deal, OpenAI deal, and the huge backlog was why Oracle rallied up so much. I wouldn't pay this valuation where it's at. It's expensive, but congrats if you own them before the day. I mean, that's insane. So, Spotify, you know what? Let's do it. Let's check it out. So, yeah, Pedro, what's up, man? You said Shopify. That's a stock in the Cathie Wood portfolio. And I love this stock, man. This is a stock I wish I owned. They're on my watch list. I'd love to eventually get exposure at the right price. But here's why Shopify deserves to be at all-time highs. They deserve to have a high multiple. They are extremely growthy. Like, check out the annual sales. I mean, in 2019, it was 1.5 bill. Now it's 8.88 bill. So they're growing their annual sales at a very nice rate. And not just the sales are growing, but the profits. Like, if we look at the FCF, which stands for free cash flow, they're making a couple hundred mil of free cash flow a quarter. The net income is also very good. They're making a couple hundred mil in net income a quarter. And they have a freaking fortress balance sheet. I mean, no net debt on this company. I mean, Shopify is a beast. I believe they're Canadian. Yeah. Yeah, Oracle's down a little bit from its peak there. Yeah, I used to have a Shopify store, and they would take a fee on every sale. What app are you using? Yeah, hey, if you want to get this app I'm on, what's up, broski? It's actually a brokerage. You buy stocks on it on here. It's in the link tree in my bio, the very first link there if you want to get it. My lowest fee brokerage. All right, so let's see. SOC stock. What's up, Aiden? He said SOC. This is Sable Offshore. So I'm guessing this is some shipping company, but let me go analyze them and see if that's true. So they actually don't have revenue. So when we go to their revenue right here, it says no data because they've never sold anything before. They've never sold a product or a service. And if you go to the net income, and yikes, it looks like they're losing over 100 million of net income every quarter. So do beware of those. Do beware of the fact that this is a revenue-less company losing a lot of money. But I don't know what they do. Maybe they have whenever they officially like get to selling something. Oh, okay, this is the thing. Look at 2025 Q3 analyst expectations in Q4. So the next 6 months are super critical for this company. So if you own the stock now, get buckle up because the next 6 months are going to be pretty crazy as they transition from doing no revenue to expecting 92 mil of revenue, then 200 mil of revenue. So watch out for the next 2 quarters. That's SOC. That's my honest thoughts, just looking at their little financials there. They're an oil company. Okay, Aiden, cool. All right, so InU Holdings, what up? Get Gretzy, what's up, dude? He said InU. I love this company. Actually, honestly, I wish I owned this one. This is actually a crypto bank out of Brazil, out of South America. And if y'all don't know, that's really the market you want to be in because the currency down there sucks. So they use cryptocurrency for transactional uses, way more than we do in America. And that's why that's the market you want to be in. And then that's also, do beware, legit 92% of all this company's revenue just comes from Brazil. So do beware, but that's not a problem for me because the profits look great. I don't care where they get the revenue from. If the financials are growing and look good, then that's all right. Because check this out. I mean, they're doing over 500, 600 million of after-tax net income a quarter, up 31%. And this is in USD as well. You know, revenue's up 28 after going 52. So revenue's up 28. Net income's up 30, expanding margins. So assets are growing every quarter. So yeah, this is a crypto bank. And I believe Warren Buffett and Berkshire Hathaway do own a little bit of that stock as well. Pretty cool. Oh, what up? Music said SOUN. Yeah, so if you're a shareholder of SoundHound AI, there's really one metric you want to watch. So check this out right here. For SoundHound AI, most of their revenue comes from their subscription business. And I love subscription model companies because it's all reoccurring revenue. But do beware of a couple things. First off, this is the good news. The subscription revenue is booming. I mean, a year ago, it was a nothing burger, 400,000 or 500,000 of revenue a quarter. But in the most recent quarter, it's at a record 32 million, up 781% after growing 800%. At this growth rate, what's it going to be this same time next year if they're growing at this rate, So that's one thing, they beat big on analyst expectations. Analysts expected 32, they reported 42. But bad news, they are losing a lot of money every quarter, 50 mil. But at this growth rate, sales up 200%, 3x. I mean, yeah, they're pretty interesting. NVIDIA did sell out of them. NVIDIA used to own them, but then they sold them. They actually used to be in the NVIDIA portfolio down here. What's the app? Yeah, hey, Julian, what's up? If you want to get this app, again, it's in the link tree in my bio, the very first link there. If you want to get this app, I'm on. It's actually it's a software where you buy stocks on a brokerage. So yeah. Lululemon is at a key Fibonacci retracement level. Let's check it out. Or should we, also thoughts on AMD. You know what? Ooh, AMD or Lulu. You know what? Let me pull up AMD stock because I do own AMD, for example. How can a busy person with a job day trade? Yeah, hey, I don't day trade, specifically like you can get like option type returns. You can get like day trading type returns by buying and holding growthy companies. Like check this out. And that's really the secret, and not selling after. Like I bought Robinhood a couple years ago. I'm up 730%. I've made over 100% every year I've owned this stock. Same with SoFi. I've made over 100% every year. But most stocks, I really just aim, realistically, I aim for 10% a year. And usually most stocks beat that. So, well, right now we've been on fire. This market is pretty, like, to keep it real with you, I wouldn't buy any, like on my screen right here, I wouldn't buy any of these stocks at their current valuations. Like I just couldn't pay it. Yeah, anyway, let's keep going here. More stocks to look at. I pulled that up because I also own AMD stock in here. Where is that? Yeah, I got 11 shares of AMD. We're up 26% on them. Here's the cool thing about AMD, versus NVIDIA. If we look at the market cap, they're a $250 billion company. If we look at NVIDIA is worth $4 trillion. So for you to double your money on NVIDIA, they have to go to $8 trillion. But for AMD, it's kind of easier from the law of large numbers. It's from a perspective, it's easier for AMD to double. But that's not why I like them. But that's not my whole main investing thesis. I actually like them because their financials are good. Like, check this out. Obviously, we know they sell GPUs. They have a 17% PC GPU market share, and that's led to a lot of growth in their, client and gaming revenue. That's up 69% year over year. Another super growthy business for them has actually been the data center business. Just like NVIDIA. NVIDIA's stock is booming from the data center business because data centers need GPUs. And guess what? AMD makes their own GPUs and they can supply them to their own data centers the quickest, the newest models the quickest, and the cheapest. And it's done wonders for the free cash flow. I mean, the free cash flow is at a record $1.73 billion. The growth is back. They're no longer advanced money destroyer, growing single digit. The revenue's up 31, net income. Oh, what I just clicked? There we go. Yeah, net income, if it load here. Uh-oh. Yeah, net income is 900 million this quarter, also pretty close to a record. So also fortress balance sheet on AMD, no net debt on this stock. So I love AMD. I might be biased. I own them, but yeah. By the way, if you want to hit the follow button, we go live every single day. We just look at stocks. I sell nothing. I have no course, book, none of that. So with both hands now, please. Marty, what's up, man? Hope everyone's having a great Saturday. I didn't say anything about insider trading. Yo, what up, Rolus? Oh, hey, I didn't actually see your comment. He says, if I have a full-time job in major financing, I was actually answering someone else's question, but let me see what you had to say. Oh, what up, Jeff Mack? Well, look at Siri. Let me actually pull up Siri. I know Warren Buffett is on the stock, Sirius XM stock, but he said, if you have a full-time job at a major financing services company, are there rules disallowing you to day trade? I wish there could potentially be, but I don't know the answer to that to confidently to really answer what you're saying there. But what's up, Marty? Or what's up, Rolis? Good to see you. So let's see here. Here's SiriusXM. A lot of people like them for the dividend because check this out. You get a 4.6% dividend, pretty good yield. But here's the thing, they own SiriusXM. It's kind of like am I right? Isn't it like a car radio service? So they're also like a TV network. But as we can see, the revenue just is kind of on a decline. It's a business that's not too growthy. They also own Pandora. Pandora is kind of like a radio app. I don't know. But here's the thing. I don't expect this company to outperform the S&P 500 in the long run, but you would basically buy this to maximize your dividend income. Here's how we can tell if the dividend is safe. Actually, this is before tax, and it says they only made $200 million after tax, which it seems low. But let's take that number. They made $200 million of after-tax net income. That was what they made this quarter, and the dividend cost. Oh, okay, so they can't afford it. The dividend cost $92 million, so they need to at least make $92 million of net income to afford the dividend, and they can afford it. The most recent quarter, they did have this weird $3 billion loss. I don't know what happened there. If they I don't know, but anyway, yeah, I don't really expect them to outperform in the long run. Yeah, car radio, yeah. So you're giving financial advice? No, Jag. Yeah, hey, none of this is financial advice. I'm not an expert. I'm just a college student. So yeah. Will you ever be open to trading options? Yeah, I'll eventually probably one day sell calls or something. I don't even have 100 shares of a stock to sell calls on, or sell puts. I mean, you basically by selling puts, you get paid to wait to buy a stock at a lower price than you would today. So kind of interesting. If you want a stock, basically get paid to buy it at a lower price. Yeah, if you want to buy a stock with selling puts, you can get paid to buy the stock at a lower price than it is today. But the risk is you might not be able to actually get those shares. Anyway, let's keep going here. I have seen some interesting options. Yeah, inspiration. Hey, see you later, Marty. Have a great Saturday, man. All right, so let's see. Let's keep looking here. I'm trying to help what up, Colin? Have you researched ISO? I don't know what that is. Is that a stock right there? ISO? I don't even know. Yeah, if you guys got a stock you want to look at, let me know what the ticker symbol. I'm not sure what that ISO thing is. Can you share the check you do before investing in any stock? Oh yeah, hey, I'd mainly just make sure the financials look good. I can trust the company. So I also have a YouTube video on how to do that, how I fully analyze a stock. Most people would probably have that behind a course, but I just have a YouTube video, by the way. The best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, but you can just type in YouTube Nathan Robert. Look up how I analyze a stock and you can find it. But I also just made a YouTube video today. I just bought a new stock, IRM, Iron Mountain. This is a data center REIT, by the way. I'll be really quick about this because I've already pitched it in the stream. But Iron Mountain, ticker symbol IRM, you get a 3.3% dividend yield. 95% of the S&P 500 are customers. And the dividend payout ratio is only a 62%. Actually have a lot of room to raise the dividend. They have a dividend policy. They don't want to have their dividend payout ratio over 68%, or they said mid 60s. So anyway, hey, what up, Van? Good to see you. What up, Among Us said AAO in stock. I haven't heard of this one before, but we'll check it out. They're a $6.7 billion company. So let's see, a $6.7 billion company. AON Oklahoma, coil products. How's their coil products? Hey, that's up very nicely. It's up 60% year over year. BASX. I'm not sure what that is, but let me just see the revenue down here. So the revenue actually fell. The revenue fell by 0.6%, and the net income fell by 70. So something is happening to their margins. That might be why the stock has been struggling the past couple of weeks here. Like the margins have collapsed. Luckily, they're still making net income every quarter, but the growth went negative and the net income fell even more. So yeah, analysts weren't expecting that. They missed on revenue, they missed on net income, and they missed on EBITDA. So it's a triple miss quarter. Hopefully, they don't keep that up. But hey, interesting. Can you mention a penny stock with good fundamentals? Ooh, you know what? That's actually what I kind of dedicate my whole Roth IRA toward. Small market cap, kind of growthy names. I'll go over probably one of my more favorite ones, my most recent purchase. This is CRMD, Coremedics. I haven't talked about this stock yet on the stream, but let me give you a quick pitch about this stock, Coremedics. If you're looking for a small cap, this one you might like. So this is a $960 million company. So the whole entire company is worth $960 million. Here's why out of all the $960 million companies out there, I like this one. And I do own them, so I might be biased. And again, if you like this stock, you're like, hey, I like it, I might buy some. You cannot make this as a meaningful size position. Like, don't keep it a small position. Like you don't trust big money in these micro caps. But here's what I love about them. Remember, the whole company is worth $960 mil. They legit have $190 million of cash and no debt. So 190 mil of cash and no debt, 20% of the market cap is cash. That's a huge safety net, gives them tremendous freedom, takes a lot of risk off the table. And also, so now, when we look at their multiple, we can kind of subtract 20%, do an X cash PE multiple. But here's the best part. They did 39 million of revenue this quarter, a record quarter, 39 million of revenue. And out of that 39 mil, 19 million of it was after-tax net income. They are printing money. They have ridiculous 50% net margins. They're the only FDA-approved product of this cardiovascular tubing thing. I'm not an expert on what they actually sell, but they're the only FDA-approved product of it. Also, the revenue is expected to continue to grow. It was 39 mil this quarter, expected to be 98 million. There are some risk here. Like they just sell one product. Well, right now, they actually just acquired a business, which will give them 8 products to sell, but they sell Def and Cath. And honestly, even if they didn't acquire that business, I still like this stock just for this one product right here. But Def and Cath, 60% of its sales come from one customer. Also, CRMD, and this is a cool new stock, super risky, but CRMD took a $5 million stake in Talfera, and this is only a $19 million company. So Coremedics just bought 25%, or no, it was actually more at the time, but they own like 30% of this company, and they bought all their shares at 55 cents. So they bought 5 million shares at 55 cents, and now it's 95. So they've already made 5 million of shareholder value. And again, this company is a very small one. They're only worth 965 mil. So that 5 mil of value they just created is actually pretty good. Good use of capital allocation. Again, what else are they going to do? They have 190 mil of cash and no debt. So, and they're earning interest. I don't want to spend too much time on them, but they make interest every quarter on their cash. Insane. So what up, Plasma? Yeah, CQQQ. This is the kind of Chinese tech ETF. So if we look at their top holdings, it's kind of like China stocks without like JD, without the retail kind of stocks. So they own my favorite Chinese stock, Tencent. That's, if you're going to buy Chinese stocks individually, Tencent is a must own. By the way, this stock if you're into games and gaming, this is an incredible company. They own Riot Games, which means this company owns League of Legends. Elon Musk plays that. But yeah, they own League of Legends. They own Valorant. This company owns Supercell. So if you've heard of Clash of Clans, Clash Royale, they own that. They own 49% of Epic Games, which owns Fortnite. So they own 49% of Fortnite. They wholly own PUBG. I mean, they're a conglomerate. And they own a bunch of stakes in a bunch of different companies. Like they own 10% of Snapchat. They own 10% of Reddit. They own 10% of a bunch of different companies. All right, anyway. That's the QQQ. This one really won't outperform the American QQQ. But yeah, that's a way to get exposure to the more growthy China tech names. I do own one China stock, and that is FUTU stock. Incredible performer. They're like the next Robinhood, in my opinion. Next ticker symbol hood. Okay. Yeah. Oh, I saw this one a couple of times now. Let me go ahead and get to it. I don't love this company, but this is Neo. and they're a Chinese kind of Tesla competitor. And here's the thing that just scares me away. So remember this whole company's market cap. This company is worth $14 billion. So they're worth $14 billion and they're losing close to $1 billion a quarter. Well, not this quarter, but they lost 700 mil this quarter, 930 mil last quarter, $1 billion the quarter, 700 mil. So they're losing roughly three and a half billion of net income a year. That when you're only worth 14 billion, that's a huge chunk of your market cap. So those net income losses scare me, but it looks like their vehicles delivered are really growing. Well, kind of, it's up 10% year over year. 10% is not too shabby. Yeah, you pay an ADR fee. I'd be very careful with them. That the whole industry, like if you look at Lucid, you look at Rivian, they all burn through net income and just aren't good investments in my opinion. Tesla's a little different, but Tesla also is getting near margins have collapsed on Tesla, but wow, they were up 7% on Friday. Look at that. I wouldn't touch Tesla either. I'm not as a huge position. So, all right. So Mark said, what do you think of Visa? You know who owns Visa? Is the super investor genius, apparently, Nancy Pelosi. So, we can see all of her publicly traded stocks. It's 3% of her portfolio. Again, Nancy Pelosi doesn't need to own it for this to be a good stock. This just is a good company. Those small little micro transaction fees that are slowly bankrupting us are making Visa a lot of money. And if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's actually a brokerage where you buy stocks on. They're beating on analyst expectations. That's what that orange line is. They beat on revenue. And here's what they're doing with all their net income. This is the ridiculous part. So revenue's up 14. They're making easily $5 billion of net income every quarter. So what is Visa doing with $5 billion of net income a quarter? Well, they're legit spending it all on share buybacks. As you can see, they're doing 4.6, $5 billion. They're spending $4 to $5 billion of net income on buybacks. So here's what that does for you as a shareholder. So the net income is up by 8.2, but the net income per share is up by 12. So you own 3 to 4% more of the shares than the whole company than you did a year ago. Pretty insane. Yeah, no problem, Mark. So let's see here. I got a question. Wait, what would you buy? The things I would buy are the stuff I kind of already own. So I guess that kind of speaks for itself. But what I would buy that I don't own right now, that's IRM looks really good right now. Do you think Elon Musk will get his pay package of $1 trillion? So basically for Elon will be worth and get his net worth will be over $1 trillion if he can basically get this market cap of 1.28 trillion to 7 trillion. So that's kind of why people are kind of happy. Tesla board 1 trillion pay package tied to 8.5 trillion market cap goal. So So a lot of investors are bullish on that, but that's a long way to go. Here's the thing. They're trading at a crazy high multiple. They're trading at 235 times net income. It's okay to have a high multiple if you're high growth, but they're actually negative growth. Their vehicles delivered are down by 14% year over year. Kind of see their deliveries by model, but if we just go to their total revenue right here, or their automotive segment of revenue, it's down by 12%. And if we, there we go. Okay. And if we go to their energy generation business, this is also down 7.5. So both businesses on Tesla are down year over year. So that's the unfortunate part. Again, I get the growth in the future is going to be from the robo-taxis and the robotics network. So that's kind of what you're paying. That's the huge premium you're paying right now for. One thing that does interest me, he says he has to get the market cap to 7.5 trillion. I think Elon Musk could do it through merging. He could technically do that by merging SpaceX with Tesla or merging XAI with Tesla, and that artificially increases the market cap. It would still, anyway. The revenue's down 12% year over year. Net income is actually down more than 15%. It says it's down 16. It's actually down a lot more than that. They had a little gap, a one-time adjustment net income trick. They only have 2 to 3% net margins now, which isn't great. So, this is a very cool stock right here. Someone said Fortinet. So that's actually a cybersecurity stock. One of my favorite cybersecurity stocks out there. We'll look at Klarna after this. So Fortinet, this is, again, a cybersecurity software name. A lot of software names have been getting hit, but the cybersecurity like industry is like so niche, and it's not getting hit as much as like Adobe and Salesforce. But yeah, check out their security subscription business. It's booming. Like these year-over-year growth rates in the middle are super nice. It's up 15% year over year after going 30. Like it just hits a new record every year, every quarter. So the security subscription revenue is booming. And it's, not just the revenue that's growing, revenue's up 14, but the profits. I mean, they're making 400 to 500 million of after-tax net income a quarter. I mean, it's great. So yeah, that's Fortinet, cybersecurity play. Yeah, free cash flow looks great too. So let's look at Klarna right here. Yeah, that's that buy now, pay later stock. We look at Affirm, Affirm's another buy now, pay later company. Looks like this one's it IPO'd at 40, it went up to 52, and now it's at 42. So again, unfortunately, since they just IPO'd, we don't get too much history behind them. But what we can see is that the sales are up 20% year over year. So the sales were 823 million. What is Affirm's sales to most recent quarter? Firms were nearly the same, 870 million. And what's the market cap of this? So Affirm has a $27 billion market cap. Klarna has a $30 billion market cap. So actually, technically, Affirm is a bit cheaper than Klarna. And Affirm actually makes consistent net income. Now, again, they just IPO'd. I don't know what the future is going to hold. There's no analyst expectations yet either. So you're kind of I'm just waiting. What platform is this? Yo, what up, Vital? Yeah, if you want to get this platform, it's actually a software where you buy stocks on. It's in the link tree in my bio, the very first link there if you want to get it. It's my favorite one, lowest fee. Someone said check out Cisco. Cybersecurity projected, just got profitable. Oh, wait. Projected to get 45 mil revenue. Oh, wait, CISO. Wait, that's not Cisco. That is something global. Okay, we'll check it out. So yeah, actually a very small name. Yeah, the whole company is only worth $40 million. So the whole company is worth 40 million and the stock is at an all-time low. So be super, super careful with that. Yeah, revenue-less company that the business is declining. So yeah, revenue's down 14 after falling 8. I mean, the revenue is only 6 million. And out of that, they're losing a couple mil a quarter. Balance sheet's declining. Yeah, to be honest with you, I mean, the lifeblood, the sales, I mean, the fact that this is down 14% scares me. I don't know how that, they're just not growing. Be careful of that. GDP growth is extremely impressive. I wonder what the Atlanta Fed GDP estimates are. They had it surprisingly high. Do you own any Fortinet? I actually do not own any Fortinet. Someone said SoFi Technologies. Yo, I do own SoFi as well. One of my best performers. Another stock I regret every share I've ever sold to SoFi. I'm up here, I'll show you really quickly if you care. But I'm up 343% on SoFi. I sold too many of my shares at a much lower price. I regret it. They beat my high expectations. Like if we go to their financial services here again, this is a fintech. They have their own banking charter. They got it through a loophole, but their financial services business is the reason the stock has such a high multiple. It's extremely growthy. Companies with high growth rates of the sales get high multiples or justifies the high premium. The revenue's up 105% after growing 85, after going 222. Like the growth is insane from a business that was, in 2020, revenue was 2 mil, 3 mil, and now it's 362 million this quarter. And it's not just the financial services business that's growing, but also the lending side of revenue. Lending business is up 30%, also to a new record. So people are just really taking SoFi serious. They're extremely growthy. The revenue's up 42, and out of this 850 million of revenue, 100 million of it was after-tax net income. So they're super growthy. They're making a lot of after-tax, profits. They're beating on the analyst expectations. Like that's the orange line. They're consistently beating on expectations. So that's why I think this one, it's justified for them to have a high premium, a high valuation. Hey Peter, if you want, what app is this? Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage where you buy stocks on. But yeah. Let's see. I could almost trade in my sports card collection for 51% of CISO. Hey, that's a small one. So would you wait more? I'd wait for a dip travel to buy more SoFi Technology, to be honest with you there. There was another stock I wanted to look at. Where was it? I missed it. No, I don't remember what it was. Okay, well, we'll just see. Um, I can't find it. I'm really scrolling in the chat looking for it. I just don't know what it was, and I was excited for it. All right. Oh, it was Meta. Okay, there it is. Okay, Meta Platforms. Yo, so dude, I'll be quick about this one because I know it's kind of boring. Mag 7 stock. Everyone knows Meta. They own Instagram, Facebook, Threads, WhatsApp. I do have 5 shares in them, so I might be biased, but that's why I'm excited to cover them because I'm a shareholder. I'm up 43% on them, and I have not taken a single share of profit ever on this stock. And here's why I think they're going higher, not financial advice, to over $800. They have a nice multiple. You know, they're trading at a 27 PE. That means they're trading at 27 times net income. Pretty fair valuation for a Mag 7 company. I really feel like it could stretch up to closer to 30 before it really maxes out. And this is the crazy part. If we go to their active users, this is their daily active users. It's 3.48 billion. So legit, according to them, hopefully none of this is AI bots, but half the world is on a Meta app once a day, which is pretty insane. I mean, the Threads app is blowing up. The Threads app now has nearly the same amount of daily active users as X, which is pretty insane. So check this out. The revenue's up 21. The profits are up 36, so that means they're expanding their margins. You know, a $2 trillion company with 40% margins is absolutely ridiculous. They also just started paying dividends or doing share buybacks, and here's why Meta is so growthy. I mean, if we go to their cash from investing activities, they're just investing in the future. They spent $25 billion. I mean, most of this is on AI. At least it's not on the metaverse anymore, but but in AI and data centers. So anyway, I love Meta. What are some good low price stocks? So low price, I mean, I don't low valuation, I think you mean. You know, I like Progressive Corp right here. I just bought 3.8 shares of them. That blue line's my cost basis average. So I got 3.8 shares of Progressive. I'm barely up on them. Also, I have Sprouts Farmers Market, I think is pretty good. It's like a healthy grocery store in some of my positions. Is it too late to buy SoFi? At this price, it is. You know, to buy SoFi meaningfully, yeah, you can't really touch it at this price. What up? Sid said BITF. Is that Bitfarms? So yeah, I believe, yeah, this is another Bitcoin mining company. And these Bitcoin mining companies they don't ever just outperform actual Bitcoin. Yeah, look at this. So 100% of the revenue is from their cryptocurrency mining operations. And you really just look at the balance sheet for these. So all these assets that they have is the Bitcoin value. And as Bitcoin has gone up, so is the value of the assets. So they have 830 million of assets. And we look at the market cap. Yeah, so $1.23 billion market cap. They had some news on Friday. They used to trade right in line at their asset value. You really look at the net asset value for these kind of Bitcoin holding companies, but mining stocks. But there's some sort of momentum the past couple of days that, like you can see on the volume as well. There was something that happened. I don't know what happened, but again, I generally, or I would avoid those. Okay, I've been seeing Open Door. Let's pull up Open Door. This is that momentum stock that that really just wants a lower interest rate environment. So if you wondering what is Open Door, this is a company that just flips houses. They just flip houses and here's what happened the last time we were in a low interest rate environment. 2022, check out what happened to their sales. I mean, they rocketed up 600%. You know, they were doing 4 to 5 billion of revenue a quarter. They're a super interest rate sensitive sector. Check this out. As rates hiked up in 2023, 2024, look at what happened to the revenue. It fell 70%, 16 under a billion. And now it's, kind of chilling at 1.5 billion. So super interest rate sensitive. And that's really why investors are kind of happy right now because we have a 90% chance of interest rates being cut later this month. And I think this one's way too momentum-y. This one is a bit way overvalued, but you basically buy that to trade it. You don't really buy and hold that one for the long run. You buy that one to trade it. But yeah, anyway. Hopefully that was helpful. It probably wasn't too much, but yeah, hey, what up, Mac? Hope you're having a great Saturday. And Jeff said, can we look at Grab Holdings? Yo, Grab is actually in a unique position right here. What website is this? Yeah, this is a brokerage. You buy stocks on here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yo, Nicholas said, new brewer. Yeah, hey, Nicholas, I can't, unless it's a popular name. I don't know what stock that is. If you got a stock you want me to look at, let me know what the ticker symbol. I don't know what that is, Nicholas. That's a weird looking. If that's the ticker symbol, then So anyway, here's Grab Holdings. This stock, if you're wondering what this company does, They do exactly what Uber does, but in all these other countries, and that's what's so, like, notice the US and Canada aren't on here, Malaysia, Indonesia, Singapore. That's why it was absolutely genius for Uber to buy the company. So they're kind of backed by Uber. Uber owns 13% of the entire company. Toyota Motor owns 5.5% of the shares. So they're also profitable. They're making net income every quarter. The sales are growing very nicely, up 23% year over year. Expected to continue to grow almost to $1 billion. Free cash flow is great as well. So yeah, they're basically like an international Uber that is kind of backed by Uber. Pretty cool. So if I was going to 45, that'd be crazy, Dale. I would love to see that. Yeah, I wouldn't, for SoFi, I'll show you my position again. I love them, but it's tough for me to buy them when I'm already up 343%. I should have never sold a lot of my shares in the first place. But yeah, SoFi, I bought this stock, many years ago. I think, right before earnings. I kind of anyway, and I just held them ever since. All right, so okay, the ticker symbol is BURU. We'll check it out, man. Let's do it. So, okay, unfortunately, I feel bad. We don't cover these kind of stocks on the channel here. So if you look in the top right, the market cap, that's how much the whole company's worth. They're only worth $16 million, and they're at an all-time low. They're 16 cents a share, so they're a penny stock. So they're a startup, so they have no sales. They're a revenue-less company. The sales were, this is 2024. It's since then now zero. It was 9,000, down 97%. Now it's zero. So they have zero sales. They're burning through net income every quarter. They have a lot more liabilities than assets. You know what? I'm going to add this one to my, don't buy that one. I would short that one. Okay, sorry. But Palo Alto Networks. So that's another company in the Nancy Pelosi portfolio, the genius. So if we go to, these are super investors. They have to make all their trades public by SEC law. And in her exact holdings in her portfolio, and one of her holdings is in a very, this is my favorite cybersecurity stock out there. CrowdStrike's another good one. But Palo Alto Networks is the market leader. They're the largest market cap, $131 billion market cap. It's a subscription model company. So I love subscription model companies. 55% of all their sales comes from their subscription. And check out how this just hits a record every year. This is their annual revenue. Just hits a record every year. I mean, that's incredible growth. Also on the quarterly, it also just hits a record every quarter. So subscription revenue is booming. They're super growthy. They're making a couple $100 million net income a quarter. Cybersecurity is always going to be needed. As AI gets better, hacking will get better. We need better security, and an AI algorithm could figure out how to hack. And we just are all, in my opinion, you want cybersecurity as an industry. Just buy it. If you're just looking for an industry to buy and never sell, cybersecurity is one of those. Hey, what up, Charles? How is it going? He says, thoughts on Pepsi versus Kraft Heinz. Yeah, so honestly, I would much rather buy Pepsi if I had to pick one of the two. Check out the yield on Pepsi. A bit of a lower yield on Kraft Heinz, but I think it'll perform better in the total return wise. They have a 3.9% dividend yield, so pretty nice yield. They just took a big stake in Alani, or Celsius, which does own Alani, but they took a huge stake in Celsius stock. They sold them Rockstar Beverage, their energy drink. And here's one reason Pepsi is kind of flat. Like if you zoom out, they're way off their peak from a couple of years ago. That's because the growth has kind of slowed down. I mean, the revenue is only up 1% year over year. I mean, y'all remember right after COVID, they started charging no one's going to pay $3 in a vending machine for a little thing of Pepsi. But and same with a bag of chips. So there's only so much pricing power they can have, and they really overdid it in 2023. So it's kind of just normalizing right now. They're making good profits. I mean, still $2 to $3 billion of net income a quarter, but it is declined. The margins fell a bit. But anyway, I do like Pepsi. I love their brands. I love Cheetos, Doritos, Gatorade. I love a lot of Pepsi brands. Is there a stock in cyber that you would recommend? Yeah, the one we were just looking at, PANW. PANW is one of my favorite cybersecurity stocks out there. Palo Alto Networks. CrowdStrike's pretty good. I really like CrowdStrike. CRWD. Over 60% of the S&P 500 are a customer of CrowdStrike. They're another huge one, $109 billion company. So Okay. Do you teach begin? Hey, I don't. Hey, Bobby, what's up, man? I actually don't teach anything. Watch out. Also, I'll say this: I sell nothing. Watch out for people impersonating me. I have no course, book, WhatsApp, Telegram, sell nothing. Watch out for people impersonating me. But if you do want to learn from me, the best way to learn is really just watch my live streams, watch my YouTube videos. I'd appreciate that. But yeah, any dividend stocks you are in? Yeah, hey, Carla said what dividend stocks I'm in. This is actually all my dividend paying portfolio. So every stock in here pays a dividend. Most of these are like dividend growth companies. Like I get it, Meta, Google, very low yields, but they all these pay dividend. Like McDonald's, I got. Like I love dividends, by the way. Like if you own shares of a company, just for owning shares of the stock, they'll pay you cash every quarter. So because I own 15 shares of McDonald's, McDonald's is paying me $26.67 in a tax-free dividend. Even though this is in my taxable account, that dividend I'm receiving of $26 is completely tax-free because it's a qualified dividend and it's taxed at long-term capital gains. And if you make under 55,000, which is me, I make under 50K, that long-term capital gains is taxed at 0%. So you pay 0% tax. So anyway, someone said SCHD. If you're looking for another, high yielding ETF right here, if you're like, I don't know which individual high yielding dividend stock to buy, you can buy SCHD. You get a 3.73% dividend. So you're getting nearly 1% of your money back every quarter, and it breaks your money up for you into a lot of the higher yielding names, like an AbbVie. I love AbbVie. I'm actually glad that this is their largest holding. Chevron. Some of the oil stocks like Chevron, ConocoPhillips, Pepsi, Merck, Cisco, Verizon, Altria. So yeah, a lot of the better, higher yielding names. Professor, hey, so what's up, Ken? You said SPMO stock. What's this one? SPMO. This is the Invesco 500 Momentum ETF. Wow. So this one has done insanely well, especially since 2019. So this one's outperformed the S&P 500. Let's see what its main holdings are. So Nvidia, so it's Nvidia, and then it's Meta. That's very interesting. And after Meta, so notice Microsoft and Apple aren't on here. I don't see Microsoft or Apple. So then it's Broadcom, JP Morgan, Tesla, Walmart, Palantir, Costco, Netflix. I really like that ETF actually. So JEPQ is better. JEPQ is a covered call ETF. You get short-term capital gains. So when you receive these dividends, like that McDonald's dividend I received, it would be tax-free in my taxable account, but this one I would pay 12% tax. And this is JEPQ. It sells calls on the NASDAQ 100, and it the premiums they collect, they return to you in a monthly dividend. So you get a crazy dividend, a 10.75% dividend. You won't really outperform the market. That's why it's, the QQQ has since hit an all-time high since February, but this one's still pretty far off its all-time high, or not that far. But anyway, you really buy that to maximize your dividend income. You don't really buy it to outperform in the long run. So someone said, "Oh, what was NBIS? That's Nebius. That's actually a stock in the NVIDIA portfolio." So if we go to the NVIDIA portfolio down here, one of the stocks they own is Nebius. And again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. And, I love this one. The reason they gapped up so much is, and Nebius just signed, it's number one here on the key event. Nebius signs a $17.5 billion GPU infrastructure agreement with Microsoft. So a huge deal they just got with Microsoft. And also, again, don't buy a stock just because NVIDIA owns it. Do your analysis. And when we do analysis on it, it looks great. I mean, extremely growth. These sales went from 14 mil to 105 mil. I mean, that's a 7x increase. And if we look at the analyst expectations, it was a record this quarter, record 105 mil revenue. It's expected in 2 quarters to be 263 mil. And they're probably going to beat on that, especially after this new Microsoft deal. So anyway, I'd really like Nebius. I'd probably not buy it at this price, but what app? Oh yeah. Hey, what app is this? Yeah. Hey, again, if you want to get this app I'm on, it's a software where you buy stocks on. It's in the link tree in my bio, the very first link there. It's my favorite one, lowest fee. Are you not afraid of a black swan event? It happened at any day. I'm not scared of it. I'm prepared for it. So that, I do got a lot of cash on hand. I got $1,000 of cash on hand. I'm ready to buy the dip, as a young investor, you shouldn't be upset about the market falling unless you plan to never invest any more money in the market. So I'm actually not too worried about the market falling. I will say a lot of valuations are super stretched. I wouldn't pay a lot of valuations I see out there. Yo, what up, Peyton? He said Broadcom's a monster. I totally agree. You know, Broadcom just signed a huge TPU deal with OpenAI. So if we go, oh, wait, where's the news here? So, weekly news on Broadcom. Yeah, $10 billion AI chip partnership with OpenAI. Pretty cool. They also just had a really good earnings report. Yo, Tingrika, no way. Yo, shout out to Tingrika with the 33 roses. Yo, I hope you're having a great Saturday. I do really appreciate that. So a lot of people know Broadcom for their semiconductor solutions, but it's really their infrastructure software growth that has been booming. I mean, you know, it used to be $2 billion a quarter, but then after one acquisition, it boomed up higher, and it's just been super growthy. And if we go to the FCF, which stands for free cash flow, it had $7 billion of free cash flow this quarter, up 46% year over year. The net income was very strong, $4 billion. They're making $4 to $5 billion of after-tax net income a quarter. They're just extremely growthy, and you get a nice yield. They're like Nvidia with the higher yield. You get a 0.64% yield. Yeah, Broadcom's great. They are a monster. All right, so yeah, hey, try not to spam there. Yeah, NVO. Let's do Novo Nordisk, and then we can get to CDE stock, and then we can look at DGR. What was that ETF with Amazon, Nvidia at the top? Yo, what up, Jonathan? That was SMPO, I believe. This is the ETF we were talking about. Look at the growth on this ETF. It's been ridiculous. SMPO, this is the S&P 500 Momentum ETF. And when we go to their top holdings, notice Apple and Microsoft aren't on here. It's NVIDIA, Meta, Amazon. Then Broadcom, Broadcom. Yeah. Anyway, so NVO, this is Novo Nordisk. If you're looking for a weight loss prescription company, this is the main one. So, they own Ozempic, which Elon Musk is on Ozempic. They own Wegovy. And if we go to where all the revenue comes from, 93% of the revenue comes from their diabetes and obesity care products. So they're a pure weight loss play, and they're printing money. I mean, this is in USD. They are a European company, but this is converted to US dollars. So you do pay an ADR fee or some kind of. Anyway, they're making over $4 billion of after-tax net income a quarter. This is ridiculous. I mean, incredible numbers and margins. They have a 3.3% dividend, so you get a nice yield. But one reason why the multiple is so collapsed, or one reason the multiple is so low compared to the industry average, is because they lose their exclusivity for Ozempic in a couple years. But I think it's overly priced into the stock. I mean, that's really why they had this initial huge downtrend. But yeah, they lose their exclusivity for Ozempic. They've also seen some increased competition from Novo Nordisk. But still, for right now, the numbers look fantastic on them. Let's look at CDE. And Tingrika said, how's Open Door? Hey, thanks again, Tingrika, for the 35 roses. I really appreciate that. Hope you're having a great Saturday. Yeah, we'll check out Open Door after this. Remind me. So here's Courier Mining, a $9.9 billion company. And when we zoom out on the monthly, they're the same prices they were back in the year 2000. So you bought the stock in the year 2000. It's the same price that it is today. But let me see what they do. So I believe they own a bunch of mines. So yeah, they own Palm, whatever, a bunch of different mines, Wharf, I guess. So if we look at the net income, this is probably because of gold. Gold prices are off the chain right now. And if we go to the revenue, revenue's up 120%, net income of 70 mil, really profitable. So yeah, that's great news. If you look at the actual price of gold, ticker symbol IAU, as we can see, gold is booming. If you got any gold chains or gold jewelry you don't really care about anymore, maybe go hit up the pawn shop and sell it. Gold's at an all-time high. Okay, so no problem there, Jonathan. I'm waiting to buy the dip. Yeah, me too. For a majority. So let's look at Open Door right here. This is that momentum-y company, super momentum. I honestly wouldn't touch this one, especially at this price. But hello from Woodlands. No way, dude. Thanks so much for the 10 or the good games, dude. I really appreciate that. Hello. Thank you so much, dude. If you got a stock you're going to look at, let me know there. Hello. So let's check this out right here. This is Open Door Technologies. This is a stock that's super interest rate sensitive. They just flip houses. And if we go back to 2022, again, in this super low interest rate environment, the sales were booming. These year-over-year growth rates, revenue was up 1,000, 500%, 200%. So they were doing $3 to $5 billion of revenue a quarter. But then as rates hiked up in 2023, look what that did to the sales. I mean, they fell 70%. So this is a super interest rate sensitive stock. And since they're so interest rate sensitive, that's why they're momentuming right now, because there's a 90% chance we're getting rate cuts later this month, 25 basis point cut. And there was some also news that just added on to the momentum of like the CEO, they're replacing the CEO. Open Door calls for 85% staff reduction. They've already cut a bunch of staff and it's helped out their bottom line. They're still losing net income every quarter, but the trend is getting a lot better. So anyway, that's an interesting momentum play into a lower rate environment. Looks a bit tough to buy now. My TikTok keeps getting restricted. Hey, I wish I could. Hey, Andrew, I wish I was an expert in there. Don't. Wish I could help you there. Okay. What did I want to look at? I have a box of gold crayons. Hey, melt it down. Time to, maybe buy stocks for that. Hey, or you have a cool collection. You got the card collection, the gold crayons. Okay, can you check Wolf? Yeah, hey, I saw Wolf. Yeah, what's up, dude? Thanks again for the roses there, Woodland. So if I'm going to be totally honest with you, my friend, I would stay away from this stock, just from a financial point of view. So when we judge this company off their financials like we would any other company, I would never, not trying to overstate this, but I never touch this stock, to be honest with you. I mean, if we look in the top right, I'll just show you the numbers for yourself and you can draw your own conclusion. Here's the risk I'd give out though. This is a $363 million company. So remember that market cap. The whole company's worth $363 million, and you're buying a business that lost $670 million of net income this quarter. That's double the entire company's worth. I mean, that's insane. $285 million last quarter, $370 million last quarter. They're burning through money, and they're losing all this net income, all for a business that's declined year over year. The sales are down 2% year over year. They now have more liabilities than they have assets. I mean, everything's headed in the wrong direction with this stock. But that's why they're also at an all-time low, and they'll have these little occasional spikes up. There could be, you could try and trade this one, wait for the next little rally, but in the long run, I think this one's going to slowly trend to zero. Not financial advice, of course, but yeah, the financials don't look too good there. Hey, Pauline, no way, dude. He said, just subscribed. How do I know when you'll be live? Yeah, if you hit the notification bell, it will tell you every time I go live, but I stream every single day. So yeah, I really do appreciate you subscribing. Yeah, if you wanted to follow button, subscribe button, we stream every single day. I sell nothing. I have no course book, nothing like that. And if you missed anything, the stream stays up so you can watch it on the replay. So yeah, hey, by the way, if you want to help me out, hit the like button on the stream. I'd appreciate that. So someone said Marvel Technologies, or, I saw Rich Tech Robotics. You know what? This is another stock I don't really love. Rich Tech Robotics is not a good robotics company. They have this one basically revenue-less NVIDIA partnership that's causing a lot of momentum, but they have no patents, no IP really. If you're looking for a real robotics company, Rich Tech Robotics is not the one to buy and hold. They're a microcap, 300 mil, propped up on momentum. But anyway, here's Crocs. Anyone, those Crocs shoes? They're actually a publicly traded company. So here's Crocs stock. They actually acquired Hey Dude, and it was not the right move for them. If anyone knows Hey Dude, it's like a shoe brand. It actually has not been doing too well. So they acquired it, and it's only just declined. It's down 17%, down 4%. So this business is declining. How is the Crocs business doing? At least the Crocs revenue is up 5% year over year. But one thing I do like about Crocs is, the net income did the net income go negative? Okay, that's weird because this company normally always makes a couple $100 million in net income a quarter. They lost an insane $500 million, so this must be some kind of one-time adjustment. But yeah, normally they're making a couple $100 million in net income a quarter. They're also doing share buybacks. But I wonder what happened this quarter. Yeah, they actually made $300 million or basically of net income, but there was some adjustment. Anywho, yeah, they're interesting. I don't know if I really expect I want to outperform in the long run. The whole industry is kind of struggling. You look at Nike. I actually just sold out of Nike right here on this candle, $79. But yeah, Nike's another one that's been struggling. It's the whole industry. Lululemon. Lululemon, like that chart looks nasty. Louis Vuitton stock, Keyring, which is Gucci stock. How's Keyring doing? I am curious. Yeah, is anyone look at Gucci stock, or that's what they own, right? So yeah, 44% of this company's revenue is Gucci. They also own YSL, some other companies, but yeah, Gucci stock not doing too well. Anyway, let's keep going here. Target. Can we look at Target stock and drone stock? I don't know any drone companies. Let me know. Bankruptcy from Wolf was approved this week. That's why it went up. Oh, so maybe they can restructure or something. Anyway, what time do you go live? Because today's Saturday, I'm streaming at a weird time, but I normally stream at 12 p.m. Eastern time every day. So the market opens at 9:30. So 10, basically 3 hours after the market opens every day, wherever you are. What's this app? Oh yeah, if you want to get this app I'm on, this is actually a broker. You buy stocks on here. If you want to get this app I'm on, it's in the link tree in my bio. First link there. It's my favorite app, favorite brokerage. So anyway, here's Target stock. This is a dividend company at this point. You're buying them for the yield. If we could look at this dividend, you get a 5% dividend, and it's actually very sustainable. And one reason why Target is being hurt so much, if we look at Walmart stock, Costco, they're not seeing this major decline like Target is. And that's because Target sells more of those discretionary items. Like only 22% of the revenue comes from food and beverage, when at Walmart, it would be significantly more. But yeah, they sell, apparel, like shirts and stuff, accessories, home furnishing and decorations, hard lines, beauty products. So credit card profit sharing. Uh-oh. Okay, anyway, the thing with Target is one reason investors aren't too happy, like the revenue is down year over year. Revenue's down by 1%. The net income is down by 21%. So that means they're losing their margins. Margins fell 20% year over year. But here's how we can check if the dividend is safe. So they made $935 million of net income this quarter. If we go to see how much the dividend cost, it only cost $509 million in net income a quarter. So yeah, the dividend payout ratio is right at that 50% range. So the dividend is safe, and you kind of buy them for the dividend. People are supposedly boycotting Target. Yeah, that is true. And a lot of people I know who used to be like Target shoppers aren't really anymore. Is the market going up this Monday? Hey, I hope so. I don't know. Lululemon's at a 5-year low. Yeah, Lululemon's been struggling, Richard. Yeah. VF Corp's another name. VF Corp, actually, they just sold off Supreme. Things were so bad at VF Corp, they had to raise cash. They sold off the Supreme brand. If we go to their cash from investing activities, if this number is positive, that means they're selling off assets. And so this huge influx of $1.5 billion was from them selling off the Supreme brand. They also own some other brands, like they own the North Face. They own Vans, some pretty popular brands, the North Face, Vans, JanSport, some other kind of names like that, like the backpack brand, JanSport. But the company's still struggling with consistent net income positivity. Like this was bad. They were burning through a couple $100 million a quarter, but now it's more better, but still not great. They lost over $100 million the past 2 quarters. But yeah, that's kind of why the stock has done so bad. Drone stock there is ONDS. Don't see the bell on the live chart. The notification bell. Oh, that's what I mean there. Yeah, hit the notification bell next to the subscribe button is what I mean there. And it'll notify you every time I stream. So here's Ondas Holdings. This is a really small company, and the momentum has been on fire recently. Let's see if there's any specific news. U.S. government launches air taxi program. Ondas completes 217 million share offering at $5 a share. Well, it's $6 now. Anyway, that's all right. Let's go look at how they're doing. So yeah, they have this Ondas Autonomous Systems. What was the revenue this quarter? So the revenue was $6 million. Again, this is an extremely small company. But the revenue went from $900,000 to $6 million. Oh, but look at the analyst expectations. Get my water here. The revenue is expected to continue to climb higher. Like it was $6 million this quarter. In 2 quarters, is expected to be $9 million. So that's interesting. So anyway, very small company, but small numbers too. You have any idea why AMD is lagging off? I noticed AMD has been falling ever since like the Oracle thing or the Broadcom signing the deal with OpenAI. I don't know. But it's also just at a pretty high valuation, 92 times net income. It is pretty expensive right here, but I don't know exactly why. Today is Saturday. Does that mean you do live? Yeah. So yeah, normally I don't stream on the weekends, but I decided to today. But yeah, we normally stream at 12 p.m. every day when the market's open. Yeah, we stream every day. Yeah, if you want the follow button, we go live every day, sometimes twice a day. What company to watch when interest rates drop? A lot of some interest rate sensitive sectors like again, a lot of the interest rate sensitive stocks have already, for the most part, priced in most of the interest rate cut. Like Rocket Mortgage has been rallying recently on the news of our interest rate cut. Open Door as well. Open Door, pure momentum off the lower interest rate environment are cut. Yeah, like a Home Depot, a Lowe's, the home builders. Warren Buffett is buying all that right now. He's buying the residential home builders. He's buying Lennar. He's buying Pool. He's buying D.R. Horton. So maybe the home builders like a Lennar. I love them. Carlisle, my second largest holding, or actually my third largest holding now. It just got taken over by CEG, but Carlisle, they repair roofs. That's legit all this company does. It's pretty boring, but they repair roofs, and there's a lot of pent-up demand in the re-roofing cycle. And they sell at high margins. If you had to pick 10 most influential stocks for growth, I don't know, Joel. That 10 stocks for me to name right now is a lot, but I don't know. Probably it's probably the stocks I own. I don't know. Honestly, there's not the risk to reward for buying a lot of stocks isn't great right here. Like if I go back to my portfolio right here, like a lot of these stocks I wouldn't touch, like Robinhood, SoFi, kind of AMD, Supermicro, PSIX. A lot of these stocks, a lot of the popular names that you want exposure to are too overpriced. But companies I would touch right now that I did just buy some, Progressive Corp. I'm only at 0.67%. It's an insurance company. Sprouts Farmers Market. They're like a healthy grocery store. I'm only at 0.48. TAP, I think that one's a steal of a deal. I wouldn't have these as huge positions, but TAP is a cool one. So those are 3 for you. All right, so favorite stock with a low valuation, that'd probably be Progressive Corp, ticker symbol PGR. You know what, let me just go over them real quick. So here's a stock that I like. I do own. I barely am up on them, like up 0.3%. But here's what's so cool about Progressive Corp. This is an insurance company, and they're trading at 13 times net income. So or a 13 PE. And here's what they do. Personal lines, annual revenue trend is insanely good. If we look at it on the most recent quarter, it's up 23% year over year after growing 23%, after growing 42. I mean, these growth rates are pretty insane on Progressive Corp. And, it's not just the revenue that's going, because the revenue is up by 21, but they're super net income positive. They made $3 billion of after-tax net income this quarter, 2.5, 2.4. So they're printing money and growing it. And the best part is that they do special dividends. So normally the stock only pays you 10 cents of dividends a quarter, but every kind of January, they reward you with a special dividend. They did a $4.50 special dividend this January. Last January, it was 75 cents. And, especially with the profits now being at a record, expected to be even higher. So anyway, that's Progressive Corp. The market's at all-time highs. This offers, this isn't at all-time highs, so it doesn't feel as bad buying it. I do like them. I do own them. Might be biased. Again, I'm not, none of this is financial advice. And J Crump, no way, dude. J Crump, thanks so much for like the 10 roses there. I really do appreciate that. I love these lies. Hey, thanks, Ray. I appreciate that, man. So here's a stock that, what up, Danny? I would be super careful with this stock. Here's how you can tell if a company has an unsustainable dividend. So if we look at this company's yield right here, they're saying they have a 7.75% dividend yield. Pretty insane. Also, their average daily parcel volume is down like 6% year over year. But here's the bad part. They made $1.28 billion of net income this quarter. It was a little less last quarter. But remember that they made $1.28 billion of net income this quarter. Well, the dividend cost $1.35 billion. So they literally, just looking at the numbers, they could not afford the dividend. So yeah, they were net income positive. Yeah, they made $1.28 billion, but they didn't retain it because over 100% of this had to be paying out to a dividend. So they're basically, they have no leftover money, and the sales are negative. Sales are down 3%. I can totally understand why UPS is at this all-time pretty like multi-year low level. They honestly need a healthy dividend cut. Yeah, charge my phone. No kidding. I didn't even realize. I didn't expect to be live this long, but I appreciate y'all being here. I'm having fun. Yeah, by the way, if you wanted the follow button, we go live every day, twice a day. I sell nothing. I have no course book. Okay, so someone said Costco. I wanted to get to that one earlier. My apologies. So, oops. Yeah, Costco stock, they have such a great business model. You have to have a subscription to even get into the grocery store. And whether or not you even go to the Costco that month, they collect that high margin subscription revenue. And, people like going there. Whenever you go to Costco, you buy stuff in bulk. So consumers feel like you get a good deal. Or, you do get a good deal. So they're making a lot of money, nearly 2 billion of after-tax net income a quarter. You get a nice 0.5% dividend yield. But the thing is with Costco is the valuation's too high for me to pay. They're trading at 55 times net income. So I actually am buying one of their competitors. So instead of buying Costco, I actually just loaded the boat on ticker symbol SFM, Sprouts Farmers Market. If anyone's heard of them before, they're like a healthy grocery store. And one thing you really focus on grocery stores is their margins. And they have industry high margins, and they're expanding their margins too. It's pretty ridiculous. So anyway, Sprouts Farmers Market is my alternative to Costco. I do own 7 shares of them. So yeah, full disclosure. I love them. So anyway, Progressive for next special dividend. Yeah, I can't wait for that. So do you know where gold and silver will be at the end of the year? Yo, I wish. I knew, but yeah, gold has had an insane rally. The way to look at gold is ticker symbol IAU, and IAU, which is gold, is literally just at an all-time high. So, if you got any gold chains, gold jewelry, maybe go hit up the pawn shop and sell it for some cash if you don't need it or something. Anyway, someone said you can get the highest price ever for it, basically. Someone said, or what up, Tengrika said, Gemini space station. Yeah, GEMI or Gemini. This is that crypto exchange. They're kind of like a smaller version of Coinbase. They're a $3 billion company. Unfortunately, they literally just IPO'd, so we don't have too much financial data here. Like the data we do have, it says the revenue's down 7.6% year over year. It says they have way more liabilities than they have assets. But usually when they IPO, with the funds they raise, they pay off all their liabilities or a lot of them. So for me to give you any real thoughts on them, I'm waiting a little bit just because there's no financials yet. I keep adding to both Sprouts Farmers Market and Progressive. Hey, nice, Crispy. Me too, man. I got both of those. So Captain Obvious, he said a great ETF. This is QQQM. So a lot of people know the normal ETF, the QQQ. Well, this is the exact same ETF, but with the lower expense ratio. And I'd always recommended this ETF. I'd always recommend QQQM over the actual QQQ. Because it's literally the exact same thing, exact same holdings, exact same NASDAQ 100 strategy, but with a lower expense ratio. They only have a 0.15% expense ratio. That's you're saving half the fees. So for every $1,000, you're saving $20 to $15 a year for every $1,000, which adds up, So yeah, if you have $1,000 in QQQ and $1,000 in QQM, you save $15 a year in fees. Buy that ETF. Anyway, same ETF, moves the exact same. So let's see this stock right here. Are you going to stream again today? I'm not going to stream again today. I've been live for over 2 hours now. Dang, time is flying by. I appreciate y'all. Dang, my dinner is going to be ready soon. Okay, so yeah, I love being here though. I appreciate y'all. If you want to hit the follow button, we stream every day. I sell nothing, no course or book or anything. So anyway, check out this company. This is a $1 billion market cap. So very small company, but they've had a lot of momentum recently. Let's see if we can figure out why and what happened here. So they sell battery segment. Okay, the growth is very strong. Again, the numbers are still very tiny, but at least it's super growthy. The revenue went from 3 mil to 15 million. And this was a record. 15 million was a record quarter. Analysts are expecting it to continue. And they all consistently beat, the orange lines of what the analysts expect, and they're constantly beating on it. In 2 quarters, it's expected to be 20 mil. They are still losing net income, but the trend is getting much better. Like they're barely losing any money, only 6 million, 50%. They lost 50% less money than the previous year. They're deleveraging. The liabilities were just 42% of the assets. Now it's only 37. So anyway, they seem pretty interesting. As they keep up that growth, that's great. I spend way too much at Costco every time I go. Yeah, dude. QQQ odd. So this is the QQQ covered call ETF. And notice this stock has basically been flat for a while. The Qs are significantly higher than where they were in February. This one is the same price that they were in February. And that's because they sell calls on the NASDAQ. So if you go to their largest or the holdings, it looks the same as the normal NASDAQ 100, but you look at the yield, they have a 13% dividend yield. So what I'm trying to say is you buy this to maximize your dividend income. You get a monthly yield, but you don't expect to outperform the market with that ETF. So yeah. So someone said, or Joel said Oklo. I actually don't like this company. I think you should stay away from this one. Oh, we'll look at Webull after this too. But this is Oklo. This is I don't know how this is even possible, but they are worth $12 billion. Like, this is a $12 billion company. They're a startup. Like, they're not even close to making revenue in even a year. Like, it says no data for the revenue because they don't sell anything. They've never sold a product or a service. They lose net income every quarter. So I just don't see a world where this is realistically worth anything close to $12 billion. It's just all momentum right now. But honestly, the nuclear momentum stocks have been where it's at recently. Like, I've looked at all the nuclear stocks out there. Vistra, Oklo, all of them. And my pick is CEG, Constellation Energy. This is the largest pure play nuclear stock. They own 50% of all the U.S. nuclear reactors. This one is done really well. But so has Oklo. The whole nuclear reactor industry has, especially after those executive orders have been signed out, stimulating nuclear reactors. They've taken the incentives away from solar and wind. The administration doesn't like wind. And they've given the incentives to nuclear. Anyway, out of all the nuclear stocks, CEG is my favorite one. Vistra Energy is not. They own not even close to the same amount of reactors as Constellation Energy, but still, that's second place right there, Vistra. Okay, let's look at Bull right here. This is actually a brokerage, so they're kind of like trying to be a Robinhood stock. So do I have multiple streams going? I don't. Well, I'm only streaming on YouTube and TikTok right now. Those are the only two things I'm streaming on. By the way, the best way to support me is watch the stream from YouTube. That's the best way to support me at all. Just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. You can just type that into YouTube, Nathan Robert. It's also in the link tree in my bio, but I'm streaming on there as well. And if you miss anything, you can replay it. TikTok literally randomly out of nowhere takes down my streams. So if you ever are watching the live and it randomly goes out, TikTok did something, but the stream will be continued on YouTube. But anyway, yeah, streaming on YouTube. It's called Nathan Robert. Here's Webull. This is a brokerage, just like Robinhood. And here's I have a Webull account. If you look at the top, this app is called Webull. I have a Webull account, so I've given them a lot of transaction fees over time in the multiple years I've had this brokerage. Here's my total lifetime return. Hey, why not show this? We're up 17% all time in here. We've definitely underperformed the S&P 500, but not too shabby, 17% all time. But they're like the next Robinhood. They just brought back crypto trading, so you can now. In my opinion, that's going to be a huge earnings tailwind for Webull. Like, the sales are already growthy. The sales are up 46% year over year, but I feel like the sales are going to continue to grow because you can now trade crypto again on Webull. I wonder if it showed. No, it doesn't. But anyway, they're still struggling with net income positivity, but they just IPO'd. So anyway, maybe they can turn into like a Robinhood where they trade with like Bitcoin, because so much of their profits come from their crypto transaction fees. So they trade with Bitcoin. But yeah, Futu, honestly, the better version of Webull stock would be Robinhood. I got so many fintechs. I have SoFi, I have Robinhood, I have Dave, and my favorite one is FUTU stock. This is Futu. They do it's actually, how we're on Webull, Robinhood? Well, this stock right here, FUTU, is actually this brokerage right here that I'm on, publicly traded. Here, why not do a quick analysis on them? By the way, if you want to get this brokerage I'm on, it's my favorite one. Best tools for analysis, lowest fee. It's in the link tree in my bio, the very first link there. It's an affiliate link. But here's this app I'm on. Even if this company did go bankrupt, you're still FDIC insured for $250,000. But they're doing great, dude. They made $330 million of after-tax net income. They have ridiculous margins. I mean, sales are up 69, but net income is up 111. That means they're expanding margins. Margins went from 38 to 48. Insane. Yeah, brokerage commissions is most of the revenue. Then the interest income. The interest income. That's where they're making like interest on cash. Like, just right. Like, I keep my cash in here. I get a 4.10% APY on my cash. They're also making a little APY on top of my 4.10%. So that makes money for the company. Anyway, it's a cool stock. All right, let's keep going here. The predict tool. Oh yeah, the prediction thing. Here, yeah. I don't use this feature often, but if you click this right here, you can click trend projection, and it'll kind of estimate where the stock is going to go based off other stocks that have this exact same pattern or very similar pattern. I don't know. Anyway, Let's see here. Okay, Lululemon. I haven't looked at Lululemon today. Let's do it. So Lululemon stock, this one has not done too well. Sam Altman is hyping it up. Yeah, I don't think Sam Altman works for them anymore, but yeah, they're like, um, he can hype it up, but there's no revenues there. I think I just can't pay 12 bill for hype. Okay, here's Lululemon. Hey, okay, so yeah, Lululemon is almost the same as Oklo in terms of market cap. But yeah, Lululemon's been struggling hard. Here's their number of stores. They have 784 stores, up from 721. But yeah, here was the bad news from their most recent earnings report. Their North America, basically American sales only grew by 1% year over year. The American revenue is only up by 1%, but the international sales everywhere else around the world was up by 25%. So when we combine those two businesses, the total sales were up by 6.5. So which missed expectations, but the revenue is up by 6.5, but the net income actually fell by 5.6. So what does that mean in English? That means the margins fell. The net margins fell by 11% year over year. So that's not great. But one thing I do like about Lululemon is the fact that they're super buyback friendly. If we go to their share buybacks, I mean, where is this? Oh, I'm in the wrong cash flow statement. I'm on the balance sheet and not the cash flow statement. Okay. Please work. Okay, there we go. Okay, so yeah, they're spending a couple $100 million of net income every quarter solely buying back their own shares. The unfortunate part is they spent all this, this 200 mil, that 400 mil every quarter. They spent all this. The stock just fell 20%. So they literally could have bought back 20% more shares if only they had waited. So they've poorly timed the buybacks. But that's how, check this out. Net income is down by 5.6, but net income per share is only down by 1.5. Pretty cool. Power of the buybacks. But again, it probably might go down to like a 10 times net income. Hey, what up, Ebo? Oh, what is that ticker symbol? TO0? TO0? Can't find that stock. Or what do you know that's doing the most stock buybacks? Apple spends $100 billion a year on buybacks. Google spends $80 billion a year on buybacks. But yeah, actually, most of my stocks, most of the companies I pick in here, I specifically buy companies that do buybacks. Every stock on here does insane buybacks. So yeah. Do you offer mentoring? Hey, I actually do not. So yeah, I don't sell anything, by the way. I have no course, book, WhatsApp, Telegram. Watch out for people impersonating me. I'll never DM you. I'll never follow you. I just sell nothing. Like if you follow me, you might get followed by a bunch of people impersonating me, which is unfortunate. So do beware. But yeah. Ray G, do you do lives? Do you do futures at all? I actually do not do futures. But someone said Ferguson. Yeah, let's check out FERG. I believe this is like an education company. And yeah, dang, my phone's on 6%. Might have to go find a charger, but they have a 1.5% yield. So first off, you're getting a very nice yield, safe payout ratio, 1.5% yield, 36% payout ratio. Yeah, let me check what industry they're in. Industrial distribution. Okay. If we go to the revenue is up by 4%. So the revenue is up by 4, but the net income is down by 7%. So that means the margins did fall a bit, but they're still making a lot of money every quarter, for like 300 to 400 million of after-tax net income a quarter. I don't like that it's declining, but still not bad. They can still afford the dividend. And they're trading even after the net income's fallen. They're still trading at 26 times net income. So that probably explains why the stock, dang, they were down 6% on Friday. Oh, wait, was that earnings? No, it wasn't. Oh, well, I don't know. Okay. Oh, what up, Henry? He said, FFAI. Let me pull up Oh, no way. Faraday Futures. I haven't legit looked at this stock in months from its last little momentum peak that I think was this peak right here. So the thing with this stock is, please don't touch it. It's going to zero, in my opinion, not financial advice. But check this out right here. If we judge this company off their financials, this is just one you can't trust. Like if you can't trust your hard-earned money into this FFAI stock. Here's why, not financial advice. The whole company is worth $250 million. So remember that number. The whole company's worth $250. Well, they lost $130 million in net income this quarter. 120 mil that quarter, 10 mil. So actually, this was a one-time adjustment. They lost a lot more than 10 million this quarter, and they're losing all this money all for a business that did 50,000 of revenue this quarter. So, they're leveraging up like crazy too. Are they diluting you? Yeah, they're diluting you every quarter as well. So you just, in my opinion, can't trust FFII stock. I am talking the same, Nathan, and what's up? Hey, what's up, Tingrika? Okay, wait, let's see here. United Health. What up, Henry? He said United Healthcare. That's a stock that Warren Buffett just bought, and that's why the stock momentum up. Warren Buffett, he's a super investor right here. If we look at his most recent purchases, we go to new. He bought 3 new stocks. One of them was UNH United Healthcare. And here's what's really meaningful about, Warren Buffett doesn't buy a stock unless he really does his due diligence. So that's what was kind of seen as good news for United Healthcare. That's why it legit gapped up from 270 to 307. So pretty crazy. I wouldn't touch this stock meaningfully over $300. But they're trading at 15 times net income. That's because the future is so uncertain, because the net income is expected to collapse. Like, really, you want to look at the forward PE. The forward PE is like, they're really trading at like 25 times net income, because look at this. The net income, it's supposed to go from, or net income per share, it's supposed to go from $5.98 to $1.70, a 50% decline. So the forward net income is really what you're watching there. But, I still like them. I think the worst is over for them. We're a customer. We use the OptumRx business. This business has been booming. You also get a nice yield, a 2.5% dividend yield with United Healthcare. So I like this one, but I wouldn't touch it at this price. I wouldn't touch it over 310, just because there are a lot of uncertain future uncertainty. I think as soon as we get close to that next earnings report where the net income is supposed to collapse, I think the stock will just trend lower. So, hey, what up, John? Good to see you, man. Yo, yeah, hope y'all are having a great Saturday. Yes, sir. What up, Ed Music? Good to see you, man. So, Reggie said ULTY. This is a covered call ETF, and I wouldn't touch these. So you basically buy these stocks to maximize your dividend income. Like this ETF was created in 2024, okay? Created in 2024. It was $19, or it started at $20. Now it's at $5. Like, it's a slow bleed out of your capital, these covered call ETFs, especially the higher expense ratio ones like this one. You're basically buying this to maximize your dividend income, and the yield isn't really this high. It's much lower because remember, when the stock goes lower, it makes the yield look higher. But these are covered call ETFs. The forward payouts are going down. But you basically buy this to maximize your dividend income. It should just kind of continue to slowly trend down like this. I'd be really careful. I'd rather just own the S&P 500. But yeah, you buy that to maximize your dividend income. So, hey, yo, what's up? Or Tempest AI. Actually, what up? Let's cover TEM right here. Tempest AI, this is a stock owned by Nancy Pelosi and her husband. So, Tempest AI right here. The stock is pretty close to all-time highs, and they deserve to be at all-time highs as well, my friend. Check this out. They're in the genomics business, and this business is booming. The high growth of the financials justifies the high multiple. So this business is up 115%. Very nice growth, and not just the genomics, but also the data and services. That's up 35% year over year after growing 33%. So super growthy business here. Revenue's up 90%. That's why it's okay. They are still losing net income every quarter, but it's really all right at this growth rate. One thing that did lead to these sales, you see how the sales are up 90%? Part of that was inorganic, because if you go to the cash from investing activities, they spent, when you include they spent $500 million buying this one company, and that's why the assets kind of ticked up there. But hey, I still don't mind it. I love how growthy they are. I think that one will be a winner in the long run, but I don't like its current valuation. So let's do NVIDIA stock. I haven't looked at them yet today, so let's do it. NVIDIA stock, I forget what this gap up news was. Oh, I forget what it was. Oh, well. But anyway, if you go to NVIDIA right here, obviously we know they have a huge GPU market share, a 20% PC GPU market share, pretty crazy. They also have this automotive business, Lucid, all their autonomy driving cars use NVIDIA's autonomous driving software. They also have, this is mainly a data center business though. 80% of their entire business is their data center business. It has incredible margins. because, data centers need GPUs, and NVIDIA makes their own GPUs, and they can supply them to their own data centers at the lowest price and the newest models the quickest. And check this out. The margins are absolutely insane. The revenue is up 55, so the growth is insane, but look at the margins. They did $46 billion of revenue. Out of this $46 billion of revenue, $26 billion of it was after-tax net income. Insane. So NVIDIA is just a beast. They're going to be a winner in the long run. And one thing I will point out, though, the law of large numbers, this is a $4.3 trillion company. So if you buy NVIDIA right now, for you to double your money on NVIDIA, they have to go to $8.6 trillion market cap. So do beware of that. But I still think they're going to continue to win. They have great fundamentals. I bought MOH because it's down almost as much as the other one. So yeah, all the Medicare, Medicaid businesses have been getting crushed. Yeah, let me see. So yeah, Medicaid is 70% of the revenue, then Medicare. So yeah, you really look at the forward expectations. And again, just like United Healthcare, the net income is going to go from $4.40 to $2.60. So the net income is expected to collapse 50%. So yeah. Same with CNC. Yeah, Looney, CNC. This is just like the next domino to fall after United Healthcare. Another one, yeah. Medicaid, half the revenue. Medicare, 20%. So yeah, they're all similar. You're betting they have a lot of regulatory headwinds, but yeah, when you ignore that, I mean, hey, okay. EL, what's up? He said, thoughts on the TU stock, TELUS. And I might have to go grab my phone charger in a minute here. But what's the app you're using? Yo, hey, Milo, again, if you want to get this, it's a software where you buy stocks on. It's a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one, lowest fee. It's also an affiliate link. So if you sign up and deposit $100, we'll both actually get a fractional share of NVIDIA, like a $20 fractional. Anyway, TELUS stock right here. This is a $25 billion company. Let me go analyze them because unfortunately the stock has not done too well. I mean, this stock is lower than it was in 2012. So you bought the stock in 2012. You're actually down on your position, but they're a Canadian company, so we're going to convert the revenue from Canadian to USD. They have a crazy yield. Check that out, a 7.5% dividend yield. That must be why investors like it. Let's go see if their dividend is safe, though. So the dividend's not safe when you lose net income. So they did have a one-time adjustment. They didn't actually lose $180 million of net income, which is good. The sales are kind of slow growing. The sales are only up 3.6, but let's go do a dividend payout ratio. So if we look before today, they're normally doing, let's just call it 200 million of net income a quarter. So they're making 200 million of net income a quarter, and the dividend cost, so do beware. The dividend cost $297 million of net income a quarter. So they actually, according to this net income numbers the past year, the net income can't even afford the dividend for the past year. So do beware of that. I'd be very careful with that. It looks like slow sales growth, negative net income, or over 100% dividend payout ratio. I'd be careful with that one. If I'm looking for a 7.5% yielding stock, I'd probably rather go with the covered call ETF. So let's see here. Oh my goodness. We have detected live inactivity. Fill out a CAPTCHA now. Okay, sorry. I just got done filling out a CAPTCHA because TikTok said I was AFK. We're back. Hopefully it didn't go down for too long. But okay. MU stock. Yeah, let's do Micron. What up, Raymond? So Micron stock, this is, wow. Look at them the past couple of days here. They have been on an absolute tear. I really think ever since the Oracle earnings. Let's go analyze them. They're one of the cheaper semiconductor plays because they're only trading at 28 times net income. And that's after the rally. The industry average is 46. So there might even be more upside. Maybe they could stretch up to like a 30, 35 PE before they max out or something. And here's why they deserve a kind of high valuation. They're high growth. If we go to their computer networking business, I mean, it's up 97% year over year. That's some very solid growth. It's nearly at a record. And this company is making net income every quarter. If we zoom out, this was a tough buyback here in 2023. They were losing over $1 billion in net income a quarter. Well, here we are now, Micron making $1 to $2 billion in net income a quarter. The growth is back. Sales are up 36%. Net income positive. So they have good margins. Wow. 20% margins. Margin expansion's great. So yeah, Micron's cool. Okay, so ASDI, actually, I want to warn you about this stock right here. So this is ET right here. This is Energy Transferred. This isn't your typical stock. This actually really, whenever you're buying this, you're not buying stock. You're actually buying units because you're actually a partner in the company. And because you're a partner in the stock, they give you a K1. They're unlike any other stock out there. They give you a K1 tax form because this is an MLP, a master limited partnership. So you're buying units and not shares, and they give you a K1 tax form. So they're notoriously hard to fill out. I accidentally bought an MLP. It cost me $300 with an accountant. It wasn't fun. I bought 2 MLPs. But anyway, you're buying this for the yield. You get a 7.5% dividend yield. They have a high yield because they're an MLP. It's an oil and gas, crude oil pipeline business. So yeah, anyway, that's Energy Transfer. You buy them for the dividend. I don't lie, stay away from them just because of the K1 tax form, complicated tax structure. So anyway, here's SMH. This is a semiconductor ETF. So if you're like, yo, I don't know whether to buy NVIDIA or Taiwan or Broadcom or AMD. I want a semiconductor stock, but I don't know which one to buy individually. Well, you can just buy this ETF, and it's done incredible since 2019. It was 75. Now it's 304. It breaks your money up for you into all the top semiconductor stocks by market cap. So its largest holding is NVIDIA, then Taiwan Semi, then Broadcom, AMD, Micron, Lam Research, ASML. A lot of great picks. So yeah, that's a very nice ETF right there. So let's see, HIMS right here. Yeah, this is a healthcare stock. They're a high momentum one. I think they're finally back. Like they've been through a lot of stuff. So they this is the reason they gapped down. They used to sell on their website a weight loss prescription. They used to sell Ozempic, a weight loss prescription on their website, but then out of nowhere, they lost the partnership. Novo Nordisk ended the partnership. And that them selling the weight loss prescription has led to a lot of growth on their website. Of the sales, a lot of growth of the sales. But now they no longer do that. So they had to price in, the future growth not being as high as it was before. But here's the business right now. It's booming. This isn't a meme stock. They have real growth. I mean, the revenue is up 72 after going 52, after going 83. I mean, the growth is insane. And not just, revenue, but net income, net income positive every quarter. Assets go up with liabilities when you issue debt. So if you're wondering what happened here, it's no big deal. Their cash went from 200 mil to 1.2 billion. They basically issued $1 billion of debt to get $1 billion of cash. They basically, I think they see some opportunity they want to buy, or I don't know. What's your broker? Yeah, hey, if you want to get this broker I'm on, it's my favorite brokerage to buy stocks on. I have all these other ones like Robinhood and Webull, but this one's my favorite one, lowest fee. Yeah, if you want to get it, it's in the link tree in my bio, the very first link there. Brokerage called Moomoo. So waiting that long to plug in my phone would drive me crazy. Yeah, hey dude, my charger is just across the room. Hey, what up, Derek? He says TLT. Yeah, TLT, this is the US 20-year treasury bond. And basically this is like the pure play to bet on interest rates going lower. As interest rates go lower, this will go up. So a lot of people like this one because when you're buying a money market fund, you're basically buying treasury bonds. But you don't get the stock price appreciation. That's why people like TLT. You lock in your money market rate, or you lock in a 4.3% yield, and you capture the upside. You capture the stock price appreciation of the bond as we go into a lower interest rate environment. Last time rates were at zero, this was $180 a share. Or right up here, $150, $160 a share. So if rates are zero, like I'm pretty sure this is like a fact. If interest rates are zero, this will be at $150 a share. Or pretty close to that or something. Anyway, yeah, they're a pretty cool bond ETF. Hey, what up, Mikey? Good to see you, man. Hope you're having a great Saturday. What you think will do better, him or NVO? Probably HIMS. But NVO seems much safer because they're larger and have a nice yield. Yo, Timo, what's up, man? He says, do you know what's up with the Tesla PE? I don't get it. So yeah, Tesla, I actually don't get it either. They just trade at a ridiculously high net income multiple. So again, he's like, if you're wondering what is the PE is the price to net income. And Tesla trades at 235 times net income It's ridiculous. And that's because the net income just collapsed on Tesla. That's the bad news. They're making net income every quarter, but they're just so expensive. The net income is down 15%. It actually was down more than that. They had a one-time adjustment this quarter. It's actually down 58% year over year. Last quarter, it was down 70%. So basically the net income has collapsed on Tesla. The growth is gone on Tesla. The revenue's down 11, net income's down 15. Again, it was actually down like 30 to 40%. They did a little gap net income trick. But yeah, margins have collapsed on Tesla, unfortunately. That's why I'm having trouble paying this valuation. Your automotive segment down 12% year over year. Energy business, the other part of their business, down 7.5% year over year. So that's one thing I would be careful with about Tesla. But really, the high valuation is a lot of that is from the future growth of the robotaxi network and the robotics. So that's the future growth of Tesla, I believe. But yeah, I personally just stay away from that one. Okay, someone told me they think Nvidia won't surpass $200. What do you think? I don't know. I mean, that'd be that'd be a $6 trillion market cap, or I don't know. Wait, is Nvidia at 170? I don't know what it's at, but 177. Okay, that's actually not okay. No, but yeah, that's not too unrealistic. Eventually. Hey, ex-dividend dad, no way, dude. Good to see you, man. I see you on Ryan's Discord and Kevin. So, hey, here's Salesforce right here. Yeah, a lot of the software names have been getting hurt. Like you look at Adobe, Salesforce, they've been struggling hard. And I actually do like Salesforce. So I love how diversified that they are. They're in service, sales, platform. They own Slack. Like that was such a great business to acquire. They own Slack, integration and analytics, marketing, commerce. So very diversified revenue streams. They're really profitable as well. They just acquired Infa, or ticker symbol INFA. But the revenue's up 9.7%. Partial, so revenue's up 9.7, and net income is up 33. So they did grow their margins, which is good because last quarter they did shrink a little. But record margin, 18.5% margin, making net income every quarter. The cash flow is good. The cash flow did fall a bit year over year, but overall I do like Salesforce. They're still at what's the multiple? They're at 35 times net income. Historically that's super cheap for Salesforce, but they're really, the jobs market. Yeah. Anyway, I like Salesforce. It's a Ponzi. Hey, what up, Timo? Yeah. SoFi or Hood? Ooh. I don't know let's do SoFi. Or, let's do SoFi. Yeah. So SoFi right here, I own SoFi and Robinhood. So I do own both of those companies. Thoughts on Palantir. Yeah, we got to get to Palantir after this. So here's SoFi. This is a fintech right here. They have their own banking charter. They got it through a loophole. It's now patched because of them. But if we look at their financial services right here, they're extremely growthy. That's why, a company with extremely growthy financials deserve a, higher multiple than the market, and they're super growthy. The revenue is up 105 after going 80, after going 222. Like it literally hits a new record every year, every quarter. And not just their financial services, but also the lending half of the business. That's also at a record, up 30% year over year. So my opinion is people are just really taking SoFi serious. They're really growthy. Sales are up 42%. Sales were 850 mil. Out of that 850 mil, 100 million of it was after-tax net income. I mean, they're net income positive every quarter. So people just really like SoFi. I wouldn't touch them over 25 a share, or really even a little lower than that too. But yeah. Hey, what up, Belly? Said thanks for everything you do. Yeah, hey, I really appreciate you, Belly. Yeah, I'm just on here giving my opinion. I sell nothing. I have no course book. Yeah, watch out for people impersonating me. If you do want to support me, though, the very best way to support me is just hit the follow button, hit the like button, subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. You can just type that into YouTube, Nathan Robert. It's also in the link tree in my bio. But yeah, I'm trying to build up my YouTube channel because I don't get many viewers on there. So yeah, I appreciate everyone on the YouTube stream. And if you get a stock you want me to look at, I cover always every stock in the YouTube stream chat. So if you have a stock you want me to look at and I, for some reason, don't get to it in the TikTok stream, if you comment it on the YouTube chat, I will always get to it eventually. So anyway, someone said, super microcomputer. Oh, Ken said Serve Robotics. You know what? Let's cover Serve Robotics. So this is actually I don't love this one as a robotics play because if we look at the market cap, they're only worth $730 million. So the whole entire company is only worth $730 million. And check out the sales. I mean, the sales were 600,000. Like they're basically a revenue-less company. I mean, doing a couple 100,000 of sales a quarter, losing a lot of money, lost 21 million this quarter. You know, they lost 21 mil. The whole company's worth 750 mil. So that's kind of significant. So, and they don't, I think I've only looked into Rich Tech Robotics, but I don't know, does this one have any real IP? Do they have patents? I don't know. But that's why if you're looking for a company, like a really good robotics company, in my opinion, check out Symbiotic. They're a warehouse robotics company. They have over 1,500 patents. Their largest customer is actually Walmart, and Walmart decided to take a stake into this company. That's how much they believe in them. They're helping out Walmart so much with their warehouse robotics that they took a stake in the company. Walmart owns 13.5% of all the shares here. They're really growthy. Like this one has real sales. Unlike that one, they did 600,000 of sales. Well, here's a robotics company that had 600 million of sales. They're still losing a little bit of money, but that's all right. And honestly, my favorite of all time robotics play will be Amazon, AMZN. Yeah, great one. So how to buy gold? Yeah, the way to buy gold is ticker symbol IAU. It's literally the digital version of gold. And arguably it's better than buying physical gold because when you go buy physical gold, you're paying like a 0.5 to almost 2% spot price premium. And also when you go to sell the gold, you are also paying a spot fee. So honestly, that's why I like ticker symbol IAU. It's super quick. Like you want to go sell your gold, you got to drive to a pawn shop or something. Like with this right here, it's super liquid. You can capture it, the exact price. So yeah, IAU is the exact price of gold. It's an ETF run by BlackRock. That literally just does exactly, yeah. You're paying much more than a 2% premium. Yeah, exactly, Kyle. I was kind of being generous there. If you go to some certain places, you're paying a huge premium when you go to buy that gold, especially if you're buying gold in smaller quantities. Like for the amount of gold you're paying for the actual price of gold, you could be paying an insane premium with those little tiny gold coins. So yeah, if you just want exposure to gold, IAU is the BlackRock ETF. The other one, is it GLD? The Spider one? Yeah, GLD. It looks the exact same as IAU because it's the exact same thing. They just trade with the exact commodity price of gold. Anyway, that's enough for gold. Let's keep going here. Someone said GDX is also gold. Hey, thanks for that, Jose. Yeah. So yeah, I forgot to get to Palantir. I haven't looked at Palantir a single time today. Let's do it. I love Palantir. They're extremely growthy, but the only thing I don't love about Palantir is the high valuation. They're trading at 118 times revenue, not 118 times profits or net income, but 118 times sales. It's pretty high, but here's why they deserve a high valuation. If we look at where the revenue comes from, 55% of all the revenue just comes from the government. A lot of police stations use their software, and it's up 49% year over year to a new record. Like the growth rate is growing. The sales are up 49 after going 23, after going 15. So the government revenue is booming. Also, the commercial side, like Google's a customer. A mom and pop ice cream shop are customers. The commercial side of revenue is up 46. The growth rate's also growing here as well. It's at a new record. So both sides of Palantir's business is booming. They had their first ever $1 billion revenue quarter. It was exactly $1 billion. And out of this $1 billion of revenue, 330 million of it was after tax net income. So that's easy math margins, 33% net margin. They have an absolute fortress of a balance sheet. No debt at all, completely debt free, $6 billion of cash, up from $4 billion. So Palantir's a beast. Don't love the valuation though. I'd love to get exposure. What brokerage are you using? Yeah, hey, Jensen, if you want to get this app I'm on, this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one. I love it. So, yeah, hey, Green, yeah, it's a brokerage, not a software. Or if you want to get it, it's in the link tree in my bio. Very first link there, my favorite one. It's where you buy stocks. So here's my portfolio. And a lot of people just like it for the cash feature. You get a 4.10% APY on your idle cash, so it earns you daily interest. So for basic math, $1,000 earns you 11 cents of daily interest at a 4.10% APY. And yeah, so let's keep going here. Ooh, Keyboard. What's up? He said Iron Mountain. Hey, Iron Mountain. I just made a whole YouTube video about this stock. So if you want to learn more about Iron Mountain, check out my most recent YouTube video. I literally made it today. So I'm kind of fresh on information about this stock. Let me give you a quick pitch. I'll be super quick. I'm not going to get too much into it. So if you want to learn more, save it for the YouTube video. But this stock is a data center REIT, a real estate investment trust. They have a 3.3% dividend yield. It's actually slightly more than this, the forward yield, but they have a 3.3% dividend yield, and it's super safe. The dividend payout ratio is only 62%, which is super low for a REIT. They also, 95% of the S&P 500 are customers. So pretty ridiculous. And if we go to the global data center business on their revenue right here. Yeah, so check this out. Their global data center business right here is booming. It's at a record. Growth rates are off the chain. Their corporate and other is up 51% year over year, also to a new record. So the business is booming. Here's so you can check if the dividend's safe. You go to the cash flow. You never look at net income for REITs because they're real estate assets. You have to include the depreciation and the amortization. So that's called the core FFO. That's basically this number down here. So they did 375 million of revenue. 375 million of revenue. Dividend only costs 231 million. So they actually have room to raise the dividend. So I'm actually within 2 weeks, I will own over $1,000 more of that stock, or more $1,000 of that stock. Okay, so not all on the stock, but at least 5. Hey, what up, Timo? Thoughts on KGC mining stock? Kinross Gold. Oh yeah, so here's another gold adjacent play. So yeah, the reason this stock has done so gold is done so gold. The reason the stock has done so good is because the price of gold is at all-time high. So they own a bunch of different gold mines, Fort Knox, Bald Mountain, all these different mines, and then they can sell it for hefty profits. They made 600 million nearly of after-tax net income this quarter. Fortress balance sheet, deleveraging, and you get a 0.5% dividend. So it's kind of like with this stock, you get exposure to gold with the dividend. Yeah, look at that stock price appreciation. It looks just like the price of gold. Very nice. So NANC, so this is Nancy, Unusual Whales Submersive ETF right here. So we go to the top holdings right here. So its top holding is NVIDIA, Microsoft, no Apple. Oh, there's Apple. Then it goes Amazon, Google, then Apple, then Salesforce, and some of these other names, like Philip Morris, Netflix, American Express. What's the yield on this? 0.18% yield. Now, anyway, looks like it's done great. It's at an all-time high pretty much. All right, so have you heard of AUR? It's an autonomous truck software stuff. Okay, let's see. Oh, yeah, this is Aurora Innovations. So here's one thing you do want to watch for this stock. And here's a cool thing. Uber is the largest shareholder of this company right here. Uber owns basically 18% of all the shares, but do beware, this company is a startup revenue, or they're a startup. They have no revenue, the revenue was 1 million this quarter. Luckily, they have an absolute monster balance sheet. They have 1.3 billion of cash and no debt. So think about that. They're a debt-free company, $1.3 billion of cash. So they're losing 200. That's actually terrible. They're losing 200 mil a quarter, but at least they can afford to lose that 200 million a quarter. We really want to see this company have some sales. Yeah, they did 1 million of sales this quarter. It's expected to be 2 million. So they're a 10 bill company. I'd be careful with that one. I'd be careful. Yeah. If you buy physical gold, it's better to bury it in your backyard than sell it. Yeah, if you're buying physical gold, you might as well just never sell it. You're not selling it for the profit. You're selling it in the wartime scenario, and you're trading that for food. Okay, so what up, Henry? He said MSOS price action prediction. This is in the leaf industry. I actually can't talk about this industry right here, but if we go to their top holdings, it's Green Thumb, Curaleaf, some of these. Yeah, anyway, Cresco, they own Cresco. Anyway, I'd be super careful with that ETF or that sector specifically. It's a sector you just don't really want to invest in. Any mergers on your radar? Not really. Not of mergers of here's Amphenol Group. They're buying a private stock. They're not buying another publicly traded company. This company is a serial acquirer. They buy so many businesses. It's crazy. Hey, what up, Akash? How's it going? Dang, I should go get my phone charger. Hey, don't worry about it, Henry. It's all good. I just can't say the word. Okay. What up? The Masked Guru said Kava. This is like a healthy restaurant. They're kind of like a Chipotle. To be honest with you, if we look at the stock price right here, they're kind of at this new 52-week low. I think it's just because Chipotle is too. Like if you look at Chipotle stock, it looks nearly identical, like seeing a similar downtrend. So first off, I would probably pick Chipotle over Kava. They have nearly identical charts in the past couple months here. But anyway, let's go analyze Kava. They're a $7.4 billion company. Let's look at it. Kava is most of their revenue. What are the sales doing? So the sales are up 20%. That's actually pretty good. For a restaurant in this environment, it's much better than Chipotle. Right now, the revenue is up 21, but the net income so the net income is actually up year over year. Okay, so that is good. Yeah. Balance sheet's good. Actually, I like the financials here on Kava. I think the valuation is still a bit high though. Like if we go to the net income multiple, they're still trading at 53 times net income. And they did miss on revenue this quarter, so they're missing on their growth. And they're trading at a high valuation. That's why I think the stock has kind of come down recently. It's kind of the same story with Chipotle. High valuation, slowing growth equals stock price collapse. So anyway, they're probably worth looking into. Don't even check SG. Yeah, is that Sweet Green? I heard of them recently. They're like they sell like salads in New York or something. I don't know. Yeah, Sweet Green, another kind of healthy grocery store, healthy food restaurant. Okay, let's see. Oh, Costco. Hey, we could look at Costco. Let's do it. Or SPGI. Let me look at this one though. Oh, S&P Global. Yo. It was not in your bio. Oh, hey, Pauline. Yeah, hey, sorry. I've been saying that for the TikTok stream. I'm so sorry, Pauline. There's the link tree on the YouTube chat. So yeah, if you want to get this app I'm on, it's in the link tree in my bio. That's really, I was saying that for the TikTok people because there is no YouTube bio. So yeah, I just pasted the link tree in my YouTube chat. It should be in the stream description as well. But yeah, there's the link tree. It's the first link there if you want to get this brokerage I'm on. It's my favorite one. But here's S&P Global. If you've heard of the S&P 500, this is the company that owns, the rights to that. And a lot of ETFs use the S&P name. So they're a very nice, data analytics company. You get a nice yield, a 0.69% dividend yield. They raise it every year. They're also doing share buybacks. So if we go to the net income versus EPS, the net income was up 6.9% year over year. They're easily making over $1 billion in net income a quarter, but the net income's up 6.9, but the net income per share is up 8.4. So you own, near 2% more of the company than you did a year ago. So yeah. Hey, thanks for that, Tingrika. She said, or someone said, there's someone pretending to be you. How do you know if it's the right one? Yeah, hey, I'm messaging. Yo, just know this. This is my only TikTok account. I'll never follow you or DM you. I sell nothing. The way to tell if it's the real me, is my exact username. It's my username on TikTok is Nathan_Robert. Yeah, if you follow me, you're probably going to get followed by some people impersonating me. So do watch out for that. But yeah, I sell nothing. I'll never follow you, DM you. Watch out for that. But look at this S&P Global company. They're making over $1 billion in net income a quarter. I love them. They're doing share buybacks. They have incredible margins, 70% gross margins and 30% net margins. So they're in market intelligence, ratings. Oh yeah, they're sharing like the credit rate. It's like oligopoly where only a couple companies control the credit rating industry. Like it's really just S&P Global, Moody's, Fitch, and then they have the commodity insights business and some of the indices business. So anyway, I really like S&P Global. Yeah, look at the indices business. It's booming, up 15% year over year. So S&P Global is a nice dividend growth company doing some buybacks as well. Still don't see it. Really, Pauline, if you, it's the first link in the link tree in my bio, or it's called Moomoo. If you want to get this app I'm on. Anyway, let's see. What up? Vic said Grab stock. Yeah, let's do Grab. Is this guy a certified financial advisor? Absolutely not. Hey, what up? Send tacos. Yeah, hey, I am not an expert. I'm not a financial advisor. I'm a college student. That I have no credentials, so I'm not an expert. Hey, no way, Tingrika. Thanks so much for the huge gift there, the hand heart. Thank you so much. Yeah, hey, that is not me messaging you, Tingrika. I don't actually follow. You know what, Tingrika? I'm gonna follow you back. But yeah, that's not me that has been messaging you or anyone. But anyway, here's grab again. I'll never follow you. I just followed that person now, but I'll never follow anyone or DM you. I'll never DM you ever for any reason. So anyway, here's Grab Holdings. This stock is at an all-time high, first stock or pretty close to it, or multi-year high. Congrats if you own this one. This is basically the international Uber. So yeah, they do deliveries, mobility, just like Uber does. But they're in all these other countries. That's what I love about this stock. So notice the US, the Canada, the UK isn't on here. It's like a pure international stock right here. So Malaysia, Indonesia, Singapore, noticed, yeah, US and Canada aren't on there. And that's why it was genius for Uber to buy this stock. If we look at the largest shareholder, it's Uber. They own 13% of all the shares. So that's what's pretty interesting about Grab. So yeah. CME owns 27%. Oh, of S&P Global? It's pretty interesting. What's up, Ed Music? RSG stock. What is RSG? Yo, we'll actually look at a few more here. Then I actually got to run. Dang, I've nearly been streaming for 3 hours straight, just talking in a room for 3 hours now. So my head does kind of hurt a little bit. But by the way, if you want to hit the follow button, we go live every single day, twice a day. So hopefully someone's joking when he said this or being facetious. Didn't you message me a long time ago for crypto stuff? No, that was not me. I'll never follow you, DM you. Watch out for people impersonating me again. It'd really be so sad for anyone to fall for a scam. But anyway, here's Republic Service. This is a great company. They're basically the same thing as waste management. So they're, and that's an industry that's really going nowhere. We're always going to need to throw away our trash. So Republic Services is a nice one. Yeah, recycling and waste business. They have a huge real estate portfolio. They actually own the land under their landfills, and it's actually some pretty valuable real estate. But anyway, yeah, their sales, it grows single digits, it's so predictable, so safe. The revenue's up 4.6%. And if we go to the net income is up 7%. So actually, hey, they're making a lot of net income, easily over 500 million of after-tax net income a quarter. You get a nice yield, over a 1% dividend yield. So yeah, they're kind of like a waste management. It's basically waste management and RSG. They're like the two industry winners. So yeah, yo, what up, AZ888? Do you trade crypto? I do not trade crypto. I actually don't own any crypto at all. So yeah, I kind of regret that though. You see how good Bitcoin's been. I kind of wish I owned some crypto, but yeah. You think it's better than waste management? I don't know, actually. They're both great. They both should perform very similarly. Waste management has a higher yield, a 1.4% yield. Also, Bill Gates owns a bunch of waste management. So Bill Gates sees something in the trash business, it's boring. It's always really the boring businesses that do good, like AutoZone, self-storage. And look at this, like Bill and Melinda Gates Foundation own 8% of all the shares. So anyway, it's just very predictable streams of revenue. People are always, especially in America, we're so wasteful. We always going to need to throw away trash. So anyway, I thank everyone so much for being here. Thanks for all the gifts, like Tengrika, everyone who gifted. I really appreciate that. If you want to hit the follow button, we're going to be live tomorrow. We stream every single day. Sunday are our main days. We're going to be doing multiple streams tomorrow. So yeah. Hope you have a great rest of your Saturday. Have a great night, and I'll see you very soon. Oh, before you go, if you want to support me, best way to support me, I sell nothing, of course. I have no book or course or anything. Best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm trying to build on my channel. I don't get too many viewers. What tool is this? Oh, hey, Keezy. Yeah, this tool I'm on, or basically this brokerage, this app I'm on where you buy stocks. If you want to get this app I'm on, it's my favorite one, most useful, lowest fee brokerage. I have all these other ones. Like I have Robinhood. I'll real quick do a portfolio update too. But yeah, if you want to get this app I'm on, my favorite one, best one in my opinion, link tree in my bio, the very first link there to get this app. I also keep my idle cash in here. But let me give you a quick portfolio update. Here's my main taxable dividend growth portfolio. So every stock in here pays a dividend. These are all dividend growth companies in the S&P 500. So every stock in here is in the S&P 500. Meta, Google, McDonald's, Carlisle, United Rentals. And then we also have a Roth IRA, which is just a tax-free retirement account. You double your money on a stock in a Roth IRA. When you sell it, it's completely tax-free. So yeah, someone said best to use is Webull. Yo, I also, what up, 8? I also have Webull. Here's my Webull account. I like this one as well, but Moomoo's better in my opinion, or just from my analysis. I actually have a YouTube video where I compare all the brokerages. But yeah, here's my Webull account. All time, we're up 17% all time in here. We have a lot of popular stocks. This is like everyone's favorite portfolio kind of. I have a lot of growthy, risky names, which to be honest with you, I wouldn't touch a lot of these names at their current prices. Like I would come nowhere near buying Robinhood, SoFi, Dave, Reddit at these prices. But anyway, yeah, here's my portfolio. Reddit, Robinhood, SoFi, Disney, AMD, Supermicro, Progressive Corp. These are the stocks I think are pretty good value right now. Market's at all-time highs, but these look pretty attractive. Progressive, Sprouts Farmers Market, and TAP Molson. So yeah, again, none of this is financial advice. I'm not an expert. Have a great rest of your day. If you want to hit the follow button, we go live every day. See you very soon. Thanks for everyone in the TikTok stream. Again, best way to support me, subscribe to my YouTube channel. YouTube channel is called Nathan Robert. It's also in the link tree in my bio. So yeah, see you guys later. Thanks so much. Happy Saturday. Hey, see you later, AZ. See you later, Looney, Ken, Timo. Thank you all so much, Joel. Yeah, I'm gonna go charge my phone now. Exactly. 3%. We started at like 25. So actually the phone battery held up pretty well. We're almost at